and that would give us a little bit earlier moment that we could assess where the data is and decide what to do on rate policy. So I think that's something to consider. I mean, some might say, well, that's faster than they'd like. I don't know. But we did retain the optionality on this.
That was James Bullard. He's the president of the Federal Reserve Bank of St. Louis. He was speaking earlier today on Bloomberg Surveillance. And a programming note now, stay tuned to the New Economy Forum this week in Singapore. Tomorrow's lineup includes former Secretary of State Henry Kissinger and Secretary of Commerce Gina Raimondo. Coming up, Balance of Power continues on Bloomberg Radio. In our second hour, we'll talk to Carly Fiorina. And this is Bloomberg.
Engine number one was able to do on the Exxon fight, it opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that is either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in Engine Number One on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social, worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year. Yeah. And so our approach is to use the vote and engage with these companies over time.
But that's always been the case, I mean, at least in theory.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Will we get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point, when the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
I'm Mark Crumpton with Bloomberg's First Word News. At least a dozen states have filed or joined lawsuits seeking to block a federal vaccine mandate for employees at hospitals, hospices, skilled nursing home facilities, and home health care agencies. A complaint filed in Louisiana calls the mandate, quote, a one-size-fits-all sledgehammer, end quote. Opponents also say the requirement will worsen staffing conditions as more employees quit their jobs rather than get vaccinated against COVID-19. In Germany, the number of daily COVID deaths has risen the most in more than 5 months. Authorities reported 265 deaths today. Cases over the past 7 days hit a record. Lawmakers in the new coalition government plan to introduce legislation that could impose tighter curbs on people who haven't been vaccinated. We are learning more about President Biden's virtual summit last night with China's Xi Jinping. U.S. National Security Advisor Jake Sullivan says the leaders spent a good amount of time talking about Taiwan, and he says that President Biden reminded President Xi he voted to support the island's self-defense when he was in the Senate. China's readout of the summit said President Biden opposed Taiwan's independence. In the UK, the labor market strengthened after the government's benefit program for those out of work in the pandemic came to an end. Companies added 160,000 people to their payrolls last month. Meanwhile, job openings surged to a record high. That all bolsters the case for the Bank of England to raise interest rates as soon as next month. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
It is 1 p.m. in New York, 7 p.m. in Berlin, and 2 a.m. in Hong Kong. I'm Matt Miller. Welcome to Bloomberg Markets. Here are the top stories we're following for you from around the world. Awaiting President Biden's Fed pick, the decision expected to come imminently. We'll discuss what that means and what it means for the future of the Fed and how it's going to impact the growing problem of inflation. However, the consumer continues to truck on. Retail sales post their biggest jump since March. We'll break down the numbers and dive deeper into Walmart's disappointing quarter, even though they beat on the top and bottom line. What's going on there? And we're going to speak to the founder and CEO of Carnomaly, which lets consumers and dealers buy and sell cars using cryptocurrency, about his company as Bitcoin falls by the most since September, hovering right around $60,000. Let's take a quick check at what's going on in the markets right now. You can see the S&P 500 up now 0.6%. So pretty decent gains here, 28 points to 4710. We're back up above that 4,700 level. The U.S. 10-year yield is also coming up as investors feel comfortable enough to let go of the perceived safety of government debt. The dollar index up about 0.25%, 1177 right now, and NYMEX crude climbing to 81.26 a barrel. It's been up and down on the day, but we also are getting news right now that multiple major company websites are experiencing problems, outages even at websites that are operated by Amazon Web Services, for example, which is a very big business. Take a look at Snap, Shopify, Spotify, Amazon, moving up and down, but just keep your eye on these stocks as we look at, see them try and deal with the problems they're having being online or offline. Of course, so much shopping is done online. It's going into the holiday season, and we focus really on retail in this program today. Shares of Walmart are falling, even as the retailer raised its outlook for another quarter, but inflation and supply chain disruptions are still taking their toll on margins as we head into the holidays. Joining us now is Stephanie Wissink, senior research analyst at Jefferies, who has a buy rating on the stock and a price target of $184. Stephanie, thanks so much for joining us. What do you see as the biggest problem here at Walmart? I noticed today Home Depot is now a bigger company in terms of market cap.
Yeah, I mean, the market is telling us certainly that this wasn't enough. I think, unfortunately, the Walmart had a really hard decision to make in the quarter, and that was deliver on the comp, protect the margins as much as possible, but still do the right thing, right? Pay your vendors fully and pass through as much price as you can, maybe not all, but also raise wages. It's a competitive market. They wanted labor in place for the holiday season. At the same time, I think they flexed their muscle a bit on this quarter. I think we saw things that Walmart will do and Walmart only will do. I don't expect all retailers to be chartering their own ships and bringing in inventory like they did. But yeah, I think the market is telling us today that it just wasn't enough in terms of the pass through, that the company still has more to gain from some of the alternative value drivers of the business. We actually look at it slightly differently. We see that the margins could have been a lot worse did they not have some of these executional drivers on alternative value platforms, things like ad platform, Walmart Connect, etc.
Stephanie, I think of Walmart as just behemoth, a powerful company that can crack the whip when it comes to suppliers, and I would assume logistics as well. Are they using that power, and are they able to really do something about the times that they get these products in?
Yeah, for sure. I mean, we're hearing across the vendor community, Walmart is still one of the largest retailers for most vendors, accounting for upwards of 20% of company revenues in some cases. So when they crack the whip, the vendor has to respond. Same is true as the #1 importer of goods into the United States. So there's certainly a supply network that is robust, that services this big engine. But I think more importantly is not just cracking the whip for the sake of winning, but cracking the whip to also partner with their vendors and their suppliers and making sure that it's not just a loss-making proposition for their support network, that they're actually building in a partnership framework. And so, even in the context of price, we saw a lot of pricing coming through towards the end of the quarter, but Walmart elected not to pass all of it through to the consumer. So they're trying to balance how much consumer inflation that they create in that basket, how much they work with their vendors so they're not hitting that vendor margin substantially, but they're also protecting their own margin. So they play a much more diplomatic role in the overall supply architecture of the United States and in many countries of the world than we probably would see with most retailers that tend to be more specialized. This is a major broadlines company. And I think they also carry, an incremental amount of weight in how they narrate some of those changes.
I saw a quote in a Bloomberg story from Doug McMillan saying fighting inflation is in our DNA. So they aren't really passing on as much as they could to the consumer, right? The consumer can handle paying higher prices. Stephanie, I also saw a Bloomberg Business Week piece about discounting as we go into Thanksgiving and Black Friday. There's going to be much less of it. You're going to have to pay much closer to full price for most of the products that you buy, right?
Yeah, absolutely. I think Walmart, again, they know their customer extremely well. Their customer tends to be value oriented. And so I think they're very conscious of the fact they don't want to put their customer in a predicament this holiday. They still want customers to be able to give, to buy for self, to build that Thanksgiving table. And I think all of that comes into play as they think about bringing value to the consumer. I think they're also, though, saying, listen, we've got a competitive position. And so if we don't pass through the full extent of price, we're actually widening our value equation. So this might be one of the best opportunities for Walmart to pick up some share as they do flex that overall kind of muscle and scale.
All right, Stephanie, thanks very much for working with us, for joining us. Sorry, I'm just looking down at all of these websites that aren't working, and I think it's very interesting. I was checking to see if the Walmart website was working. We are seeing Target. I know, Stephanie, you cover Target. Their website is down right now. We see Home Depot website down right now. We see Lowe's website is down right now. How important are the websites to these companies these days? So much more than they were a year ago, or especially 5 years ago, right?
Yeah, absolutely. I think one of the biggest takeaways from the pandemic is just two factors. One, just the level of e-commerce penetration that wasn't even on the radar prior to the pandemic. But I think secondly, just the digital fluency that consumers have to move across different channels and different modalities. So when your website is down, it has two problematic areas. One is that your consumers can't access your goods to purchase them. But number two, that they can't access the goods to resource them or research them to make educated decisions, whether they're buying online or in store. So definitely something to keep an eye on. We have a lot of small companies that we follow that use AWS, and this is not the best time of the year to have your website crash.
Yeah, absolutely. That seems to be one of the problems. Stephanie Vissing, really appreciate your insight. Senior research analyst at Jefferies covering retail. And Down Detector is showing us right now that a number of websites, Apex Legends, Toggle, Shopify, Cloudflare, AWS, all down right now. We're going to continue to keep our eye on this for you. Sticking to retail, something that caught my eye, Amazon is scrapping a major office expansion right down here in Jersey City, New Jersey. It's a blow for the landlord, Matt Calley Realty, and New Jersey's office market, which has been hammered by the pandemic. Bloomberg had reported earlier this month that Amazon had been close to a lease for almost 400,000 square feet of space on the city's waterfront. That deal, which had been discussed for months, is said to have fallen apart after Amazon backed out last minute. This, according to a person familiar. Shares of Matt Calley, which had gained 56% this year, are falling on that report. Coming up, all that's on everyone's mind right now seems to be inflation. It's been that way for weeks, even months, but it may be a distant memory soon, according to Federal Reserve Bank of Minneapolis President Neel Kashkari. Of course, he's a dove. We'll hear from him next. This is Bloomberg.
You should be thinking about formerly incarcerated people as representative of their families also and of their communities. These are human beings. They're not disposable items. They are not to be warehoused, locked away, out of sight, out of mind. And so I'm out here in the public because I am the conscience of those folks of America, I hope. I'm hoping to prick their conscience and know that I am just a symbol of a much greater problem.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg Markets. I'm Matt Miller in New York. Inflation has hit a high, but Federal Reserve Bank of Minneapolis President Neel Kashkari says that the Federal Reserve shouldn't overreact to inflationary pressures that are likely to prove temporary. Bloomberg's Kathleen Hayes spoke to him earlier.
No one is making light of that at all. My main point is we shouldn't overreact to what is likely going to be a temporary factor. Let's just take the supply and demand one at a time. If it's a supply side and it's supply chains that have been disrupted because of the pandemic, barring some introduction of some new wave or some new strain of the virus, those supply chains should work themselves out, some taking longer than others. On the demand side, which many people have argued this is really about a demand shock, a lot of fiscal stimulus, we know the path of the fiscal stimulus. Fiscal stimulus provides a one-time boost, and then it tapers off, and it itself becomes a drag on the economy. So unless Congress passes a massive new spending package that's not paid for, there's nothing that I'm seeing in these fundamental factors that leads me to think that this is a long-term change in inflation or inflation expectations. We are seeing pressures that are real, but most of the evidence in my mind seems to be that they're going to be temporary, even though they are real and people are having to pay it. But the challenge is if we overreact by saying, let's just change the path of monetary policy to try to deal with a one-time effect, that could lead to a worse long-term outcome for the economy.
Well, the supply chain shortages, constraints, blockages, whatever you want to call them, they don't seem to be going away. If anything, they seem to have broadened. I'm not suggesting that we're out of the woods yet, at all. But many of these sectors are working themselves out. Some are going to take longer than others. How about demand? Larry Summers, a former Treasury Secretary, well-known economist, has been concerned for some time that the Fed is not going to move fast enough and is going to let inflation get so high that the Fed has to move way too fast to pull it back in. He's talking about things like, you've got demand-driven inflation prices rising because of a strong economy, some people going back to work, and it's not just things like commodity prices, firmer housing prices in a hot market, and things like that, although they're contributing to it too. What is the risk that this doesn't go away, that it does become entrenched?
Well, this goes back to, I read Larry Summers put out a piece earlier today. It goes back to what's the economic theory that a one-time boost of fiscal spending, a one-time boost of demand, it leads to higher prices, yes. Does it lead to higher inflation, which means ongoing year after year after year, continuing price increases? I don't really understand the mechanism by which Larry Summers thinks that this one-time fiscal stimulus leads to a change in the path of inflation, unless he's saying, well, inflation expectations are going to become unanchored. You know, the Federal Reserve is never going to allow that to happen. All of my colleagues and I are paying very close attention to the data, and if we thought that long-term inflation expectations were becoming unanchored, we would certainly adjust to make sure that that did not happen.
That was Federal Reserve Bank of Minneapolis President Neil Kashkari speaking with Kathleen Hayes. Staying on the Fed, President Biden's pick for the next chair is said to come imminently. Here to break down what that means for us is Bloomberg's Washington Bureau Chief Peggy Collins. Of course, I took that word from Ohio Senator Sherrod Brown, but after he said it was imminent, he said he really doesn't know like when or anything about it. So how soon do we expect this decision to be made, Peggy?
Well, I think, Matt, a lot of people are thinking it will be made before Thanksgiving, but there's a couple of question marks there. When we say a decision will be announced, will it be just the Fed chair, which, of course, Powell's term is coming up in February, or will the Biden administration announce a slate of candidates for the Fed? Because the Biden administration has an opportunity to change up the Fed pretty considerably in the next several months. There are as many as 4 open seats at their prerogative, really. And so the question is, will they announce 1, will they announce 2 potentially, or will they announce a full slate?
And we know that Democrats, well, at least Senator Warren has said that Jerome Powell is a dangerous man. What do they expect to change here? Do they just want the Fed to be more dovish?
I think there's a couple of things. The Democrats have zeroed in, including Warren, but also Senator Sherrod Brown, on financial regulation. They feel like under Powell's term that some of the financial regulations have been sanded down a bit, and that is something they're looking to change. Second, climate change. They want the Fed to be much more assertive, aggressive on climate change in terms of potential regulations for the banks or disclosures for the banks around climate risk. So those are 2 big ones. And the third thing to note is really diversity. That the Biden administration has said it wants, the Fed and a lot of agencies that oversee the country's issues to look more like America does. And so that's something that we are watching for as well in terms of their decision-making process.
All right, brilliant wrap. Peggy, thanks so much for joining us. Bloomberg's Washington, D.C. Bureau Chief Peggy Collins talking to us about the Fed and the White House. Now, inflation and central banks will certainly be part of the topics at this week's 4th annual Bloomberg New Economy Forum. We'll share with you face-to-face discussions with various policymakers and CEOs on topics ranging from finance to tech to climate. Goldman Sachs and Alphabet, just 2 of the companies that have CEOs at the event. Stay tuned for that. Still ahead, buying and selling cars with crypto. We'll talk with Scott Henninger, founder and CEO of Carnomaly, an automotive crypto company which has just launched its own digital token. This is Bloomberg.
You finally got your taste of MIT. So why did you decide to leave MIT and come in and run the SEC?
One, when a president asks you to do something, it's really hard to say no. But it's also just an incredible privilege and an honor to serve.
For us, it's a question of how do we, as rapidly as possible, transition ourselves away from a fossil fuel-based economy. And that, of course, has a huge focus on the transportation products, but it also includes energy products.
This is Bloomberg Markets. I'm Matt Miller. Bitcoin and other cryptocurrencies are falling today, with Bitcoin having its worst day since mid-September, briefly dipping below $60,000. Ether is also touching its lowest levels this month in a broad-based retreat from recent record highs. According to one tracker, the global crypto market cap has dropped some 10% in the past 24 hours, but it still stands at $2.7 trillion, which would make it, I think, the most valuable company in the world. Technical indicators had suggested the strong run of late across the volatile market was due for a pause. So we may have been, and some traders may have been expecting this, obviously not all, or you wouldn't see the drop now rather than last week. Joining us for more insight on crypto and really to talk about the crossover between blockchain technology and automotive sales is Scott Henninger, founder and CEO of Carnomaly, which lets consumers and dealers buy and sell cars using cryptocurrency, but also track vehicle history, and is operating a DeFi platform as well. Scott, I think it's really exciting. Talk to me first, or tell me first how you got into this, because I know for a long time you've worked in automotive retail, about 2 decades. How did you go from that to creating your own token and building technology on the blockchain?
Well, Matt, thanks for having me on. I really appreciate it. I know we did a radio interview several months back, so it's exciting to have this opportunity to speak with you again. For the listeners out there that might not know what Carnomaly is, what Carnomaly is creating is basically an automotive blockchain vehicle platform that allows you to buy cars, sell cars, finance vehicles, and also research the vehicles, but also vehicle history reporting, which right now consumers really don't have control of their vehicle history report. Using blockchain technology, Carnomaly is able to give owners the ability to interact with their vehicle history reporting. As far as the buying and selling vehicles with the cryptocurrency, basically what we're going to do is partner with dealers and be the in-between that allows consumers to use cryptocurrencies to buy vehicles, to sell vehicles, and also do that peer-to-peer. So if you wanted to sell a vehicle to a friend, we would be able to also help facilitate that as well.
So if I had, a bunch of Bitcoin sitting around, I'd be very happy. If I had a bunch of Ether, what would I do? I would buy your token with that, the car token, and then use that to purchase a vehicle or a number of vehicles?
Well, so basically you'd be able to use the car token, or you would be able to use the Bitcoin or Ether or several other different currencies. So we're working on bank partnerships to allow us to facilitate these transactions. So the essentially dealers don't want to deal with the cryptocurrencies because once they get it in their hands, they don't know what to do with it. And they're waiting, the price is like today, the price is volatile. So, basically what we're going to do is we're going to be that intermediary that gets the cryptocurrency, facilitates the transaction for the dealer gets paid for the vehicle, and then we have the cryptocurrency, which we work through our bank partnerships and other exchange partnerships.
Let's touch on the DeFi idea quickly, Scott. How is this going to work, and when do you see it really taking off?
So the DeFi, the way we're doing DeFi is basically, it's kind of, I call it like a hybrid. So we're taking traditional loan practices, underwriting practices. So we're still pulling credit. We're looking at people's credit, and we're basically evaluating what do they qualify for. Then what we're doing on the other end is we're allowing people that hold cryptocurrencies to actually come in and fund those loan pools. So you might have people all over the world that fund these pools of loans for these vehicles and these buyers that are buying vehicles. So to the consumer that buys a vehicle and has their loan through the DeFi loan platform, it'll just be like they had a normal loan through another bank. They just pay their monthly payment, use their debit or credit card or bank account to make their monthly payment.
All right, Scott, thanks so much for joining us. Fascinating stuff. Scott Henninger there is the founder and CEO of Carnomaly. We got some breaking news on the COVID front, at least in the pharma space. The White House, according to the Washington Post, is going to buy 10 million courses of Pfizer's COVID pill treatment. So we've been talking about last week this pill treatment. The White House, according to the WAPO, is going to buy 10 million courses. Pfizer shares still down on the day, but recovering on the headlines. This is Bloomberg.
We landed with 40% remaining. Years ago, Ewan Dixon was the first guy to do it. It's taken a century for us to change our propulsion system away from liquid fuels. There are dozens of international companies in that airframe size who've realised the opportunity, are in a race to get those commercial aircraft out there at that scale. It's an area that can be served by hydrogen, which we're well placed with, through fuel cells.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
I'm Mark Crumpton with Bloomberg's First Word News. The jury in the trial of Kyle Rittenhouse has begun its deliberations. The 18-year-old killed two men with an assault rifle at a Black Lives Matter rally last year. He's charged with counts ranging from reckless endangerment to intentional homicide and could face life in prison without parole if convicted. The August 2020 shootings in Kenosha, Wisconsin came amid social upheaval across the United States after the murder in Minneapolis of George Floyd. Nearly 300 people trapped overnight in their vehicles by mudslides on a highway in British Columbia have been rescued and flown to safety. Crews are still trying to determine if anyone was swept up in the flow of debris set off by torrential rain. Multiple highways in British Columbia were closed due to the downpour. Turkey's foreign minister said today his country is ready to offer whatever support it can to help amend relations between Lebanon and Gulf Arab nations who are embroiled in an unprecedented diplomatic rift. Mevlut Cavusoglu made the remarks during a visit to Beirut, where he met with his Lebanese counterpart and with the country's president. Lebanon spat with Saudi Arabia and has threatened to destabilize the new Lebanese government and escalate the country's economic tailspin. It erupted over comments by a Lebanese cabinet minister over the war in Yemen that angered Saudi Arabia. Japan, which started doling out COVID vaccinations months after the United States, now has the highest inoculation rate among the group of 7, and it accomplished that without mandates of any kind. Japan has fully inoculated 75.5% of its population of 126 million people. That's according to Our World in Data, an online scientific publication that uses population statistics from the United Nations. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Hi, I'm Amanda Lang. Welcome to Bloomberg Markets.
And I'm Matt Miller. Welcome both our Bloomberg and our BNN Bloomberg audiences each day at this hour. Here are the top stories we're following for you from around the world. With inflation in full swing, the question is now, how long does it last and how should the Fed approach it? We'll discuss the rate conundrum that once bedeviled Alan Greenspan. Plus, as the supply chain crisis continues, we'll speak to Lily Shen, the CEO of transportation provider Transfix, on why infrastructure is critical to fixing the current issues. And from trucking to biking, we take a deeper look at how Peloton was able to reverse its sell-off. All that and more coming up.
And Matt, it is optimism we're seeing around some of that data, retail sales being one of them, front and center, in fact, and some reaction to that, although the pricing component of that will be cause for concern for some. There's other strong data out there as well, though, supporting this idea of growth. So we're seeing growth stocks back in the driver's seat here today across North America. You can see that's true in Toronto as well. Consumer discretionary and tech are the two strongest groups in the U.S., though that 10-year yield continues to sit at 1.61. Of course, as we wait for word on the new head of the Federal Reserve, and that may well have an influence based on the interpretation of just how dovish or hawkish the successor or incumbent may be. We are watching the retail space pretty closely, and it's interesting to see in those big retail names the difference between Home Depot and Walmart today. As Home Depot rises, Walmart sinks on some margin pressure. But for what it's worth, it was the U.S. retail sales number in October that is really catching our eye here as we see a third month of strong gains, signaling that consumers are back, of course, even as the inflation continues to outpace expectations, highest in decades. And we are seeing overall purchases up 1.7% in the month. That's the most for 7 months. It was 0.8% expected, so well above expectations, Matt, and certainly a sign that there is some inflation that consumers are willing to bear. And the question will be, and we saw that today, Walmart's paying a bit of a price. Will retailers absorb that in softer margins? And if they will, that's maybe not so good for investors, but it's good for the broader economy. It's good for so-called Main Street.
Yeah, absolutely. And it'll be interesting to see when we get closer, as we get closer to Thanksgiving, as we get closer to Black Friday and Cyber Monday, how much consumers are willing to pay, because the discounting that we're seeing so far is nothing compared to the discounting that we've seen last year. So in a lot of cases, they're going to have to pay closer to full price. In a lot of cases, they're going to have to pay more than MSRP. While the overall retail numbers look good, that doesn't mean inflation still isn't having any impact. Inflation is especially taking a toll on lower income families who spend roughly a third of their earnings on essentials like food and energy. That's eating into recent wage increases, and this comes after the pandemic relief expired for about 7.5 million people. So there's a big difference, I think, between consumers that have managed to save a lot of money and are able to spend more than the asking price on goods they don't necessarily need, and consumers that are struggling to pay rent, to pay energy bills, and to pay for food right now as those prices skyrocket as well.
And we should note, Matt, that some of the wealth effect that we're feeling, whether it's from the stock market or our home prices, will not be felt by those that are the most vulnerable. So that there's a kind of a one-to-one line here of folks for whom discretionary income doesn't exist, right? Their purchases are non-discretionary. They're not really fully exposed to the stock market in the same way others might be. So the wealthier get wealthier, and the question, of course, is what we do about that inequity, which has existed now for some time. It is not a pandemic-related issue, but it's been made worse.
Yeah, absolutely. And a lot of people are going to be asking how central bankers can affect that issue. It's time now for our stock of the hour. A good transition from the Fed to Peloton. But the company sold $1 billion worth of its stock at a curious time, maybe an unfortunate time. Investors aren't bummed out, though. You can see the shares are up 8%. This is a 2-day chart. If you back it out and look at a 3, 4, 5-year chart, you'll realize there were much better times for Peloton to raise cash by selling shares in a secondary, because we're at the lowest level that we've been here for years. Kriti Gupta is here with our stock of the hour. Kriti?
Yeah, well, to your point, in the last 2 weeks alone, it has dropped 40%, loss of a share price. A lot of that is because they cut its outlook. They said that pandemic boom, well, it's not really lasting much longer. Well, let's talk about the offering.
First sell shares and then cut outlook.
Well, they didn't get that memo, Matt. Well, basically they sold this offering into some weakness. Like you said, now they're rallying. The offering here was 23.9 million shares priced at $46 each. $1 billion of stock. That was essentially the offering as an 8% share dilution. But here's what they got, or what they're expecting to get. Expecting net proceeds of about $1.1 billion. So they actually did see a little bit more demand, or getting a little bit more demand on those shares than they were expecting. So that's really the reason that the stock was dropping 6% in the pre-market because of that need for cash, and is now rallying to the tune of 12% intraday. And this is important, like I said, because in the last 2 weeks alone, you have seen a 40% drop, and this does not compare to the fact that you saw that massive pandemic boom in the last year. But like I said, they also needed quite a bit of money. You can see on your screen right now, they have been cash strapped, a $680 million loss in the last 2 quarters. So this really was, at the end of the day, Amanda, a fundraising story.
Yeah, and you really have to worry who's buying the stock today and bidding it up, because the logic would point the other way, arguably, not just the dilutive effect, but subscribers, which is a key metric for this company. Something else that's been showing a slowdown.
Right. I mean, up 7% year over year, but still slowing down. You're seeing that deceleration. And it's not just about subscriber growth. It's about usage as well, because you are seeing a lot of people work out less broadly as they're commuting to work. And Peloton is really being impacted by that. In peak pandemic, 26 average monthly workouts. That was the figure to watch. Now it's about 15 average workouts. So really, Peloton losing some of that momentum they had last year.
All right, Kriti, thanks so much for joining us. Bloomberg, Kriti Gupta, talking to us about Peloton, our stock of the hour. Coming up, we're going to have the latest on the global supply chain crunch hitting economies around the globe. You may have heard us talking about it a little bit the last couple of days. Lily Chen is the CEO of digital freight platform Transfix. She joins us next to talk about how her company is using AI and machine learning to ease bottlenecks. This is Bloomberg.
目前眼前状对我们军方来讲的话，
我只跟委员报告，是我从军以来40多年以来看到真的是最严峻的时候了。要犯台的话，他目前有这能力的，都有的啊，但要看怎么一个结局。所以我们不做任何挑衅啊，但如果把他激怒了，就跟我们人一样，你把我激怒了，我什么方能力我也会发挥出来。所以2025是我们研判要全面啊，我们这样研判的。
Well, China has, I've spoken with Xi about Taiwan. We agree we'll abide by the Taiwan agreement. That's where we are. And we made it clear that I don't think he should be doing anything other than abiding by the agreement.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says I look like I'm on.
I know, I noticed that.
Do you think I need a lift? Is it time
What
that
did he say about me? What did that particular gentleman say about? Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I had no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Lagging profitability that the European banks still undoubtedly have is structural weaknesses, which are linked to cost efficiency, to focus on business model, to investments in digitalization.
This is Bloomberg Markets. I'm Matt Miller with Amanda Lang. Now, if past market cycles are any guide, ocean freight rates, which have pummeled retailers and manufacturers, may take more than 2 years to return to normal levels. That's a conclusion of an analysis from the firm Sea Intelligence, though container shipping rates have declined in recent weeks from record peaks reached in September and October. Ocean freight is still up nearly 300% from 1 year ago levels. And Amanda, this hurts, especially any consumer who is currently thinking about shipping a car back from Berlin to New York is going to pay through the teeth to get that thing in a container, and it's going to take so long for it to come into port.
And I do think it's important to really consider how these stories affect you personally, Matt. That's usually what I'm most interested in, is how does this macro event affect Matt Miller? But you are, of course, representative of many, many people. And I guess the point is you're doing that right now, so you're going to be stuck with the freight rates you're going to get, right? You can't say I'll do this in 2 years. But if it does last 2 years, and history tells us that, what is the Fed thinking? What is transitory other than in some dusty economic book about a 2-year return to previous rates?
Yeah, absolutely. Although I will point out that I only pay like $140 a month for my parking spot in Berlin, and I talked to somebody on the Upper West Side who pays $900 a month for a parking spot. I may be better off just leaving my stuff over there. But other people,
you don't need a car.
Other people don't have that choice, and it's more than just cars, right? People are shipping huge containers full of iPhones. They're apparently taking too long to get here. I'm sure there are some Elmos that are on their way over here. There's a lot of stuff that we need to operate our lives on a daily basis, and it's just not getting here fast enough or cheap enough. Joining us to discuss how the trucking industry is managing bottlenecks is Lily Shen, President and CEO of digital freight platform Transfix. Especially as we get closer to the holiday season, Lily, this is going to become a bigger and bigger issue. How bad is the supply chain crunch, the logistics problems that you're looking at right now?
Matt, thanks for having me. I think everything that we are seeing is, in fact, that, there's a lot of needed improvements in the overall supply chain. And I think everything that we have been experiencing firsthand really highlights not only the importance of the supply chain for the economy, for the environment, for all players who are involved, but also the critical role of infrastructure. And, I think with all the efforts going on, it's not going to be overnight. This is going to take time. And some of it has, in fact, been very structural. And even pre-COVID, I think that the pandemic has highlighted this even more so for all of us. And as we think about the challenges in the industry, it really goes beyond the containers only or the driver shortage. It's truly looking at this end to end at a network level and being able to drive far more efficiency into the system and with technology and data.
So, and just to explain how Transfix does that, Lily, because one of the parts of this story, of course, that has been so revealing to so many is this whole idea that we've almost overcapitalized the supply chain system. So enlightened self-interest in one part of it can mean the whole thing breaks down. How would your logistics operations system help undo that, help reverse some of that problem?
Absolutely. I think one of the big problems or challenges that has existed in the industry has in fact been that technology has been not only incredibly siloed, but also fairly archaic in nature. And so our technology really looks at, everything end to end and looks at everything at a network level, being able to truly connect dynamically and real time, access to capacity as well as demand with all the customers and carriers that we work with.
So when you look at an upcoming Thanksgiving, Black Friday, Cyber Monday, Christmas, what is it going to look like this holiday season?
It's already looking like it's a fairly tight market. What we're continuing to see are that products are likely going to be in short supply and prices will be increasing. This is something that we actively manage through our technology platform, working incredibly closely with all the customers on Transfix, as well as the carriers and drivers who work with us.
So we're just showing this as we see the shipping costs come off of the super, super high levels. Are you optimistic that this resolves itself in weeks, months? What's your kind of thinking about when we get back to what might be considered more normal?
Well, it's hard to say what normal looks like these days. But, I do suspect that this will go on for certainly a number of months. I don't think it'll be overnight, nor do I think it'll be a matter of weeks, but we will likely be looking at this going into early 2022 as well.
Lily, it's great to have you with us. Really appreciate it. Super important subject. Lily Shen is the CEO of Transfix. Thanks. And coming up, President Biden's Fed chair pick said to be imminent. We'll talk about what the pick might mean for the Fed as well as the economy. Next.
Think competition is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever. It'll look like it.
We've seen a bit of departures in this market, and this market has three very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the U.S., New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one directional traffic from the US to the UK, and now it's open, of course, to UK nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
No matter how this comes out, there'll be a lot of continuity in Fed policy. Both of these players have, long track records at the Fed. So certainly it's a big committee. Also, I think people have to keep that in mind. And there's a lot of experience on the committee. So I think we'd see continuity.
This is Bloomberg Markets. I'm Amanda Lang with Matt Miller, and that, of course, was St. Louis Fed President James Bullard talking about the future of the Fed. Of course, the other elephant is inflation. Joining us for more on this is Bloomberg opinion columnist John Authers. Great to have you with us, John. And of course, we know that there's a lot of speculation right now about what might come next for the Fed, and there may be an announcement as soon as today from President Biden. Inflation does seem to be the point of debate. Do you think that the market is right to see a big turning point here, that the next Fed head will be a huge differentiator in terms of how the Fed handles it?
No. On inflation, no, I really don't buy that. If you go back over history, as Jamie Bullard was just saying, Jerome Powell has been on the FOMC for 9 years. Lael Brainard has been on the FOMC for 7 years. Neither of them has dissented. Every single time on monetary policy, they have voted the same way. So both of them are plainly complicit, if you want to use a loaded word, or well experienced in the ways of the Fed, and there's no particular reason to think that either would spell a very direct change. I mean, the other argument people make is people tend to think that Democrats want to be more dovish, less keen to raise rates. With inflation where it is now, I'm really not sure that's operative either.
Well, just to sort through the colloquialisms, when we talk about an elephant in the room, that means there's a large issue that everyone's ignoring, right? But no one is not talking about inflation. We're all pretty focused on it, with the exception maybe of the Fed. Why is that?
Well, the thing that worries me most about this, I think the place where there is an elephant, an invisible elephant, is the Oval Office, perhaps, rather than the Eccles building where the Fed is, because you would think that inflation now becoming a big political issue as a major sword used to inflict defeats on the Democrats in the midterms, that would be a very big issue. And yet it is more or less irrelevant to the choice of the next Fed chair. It's about, one is a card-carrying Republican, one is a card-carrying Democrat, and they have different views on deregulation. Although, again, the deregulation that is now so unpopular with the Democrats was largely carried out under President Clinton.
But neither one of them has, a magic wand in terms of inflation. In fact, the president is more likely to influence inflation with his spending bills. He says over the long term, what he's trying to do is reduce inflation. I can understand the logic there, but the voters think, no, when you spend this much money, when you throw it all out into the economy, you're causing inflation.
I personally would come down between both those points of view. Spending like that will have an effect with a lag. It won't help improve the efficiency of the country, reduce bottlenecks for years, and fiscal policy like that won't have an impact on anything you would notice in terms of interest rates for years either. It's just plain irrelevant for the next year or two. That's the great big imponderable issue. Is there does seem to be a lot of demand, in which case you could deal with demand, dampen demand a bit by making money more expensive, but
Right.
On the supply side, it's not clear, it's obviously a huge part of the inflation problem. It's not clear that monetary policy can do anything about ports in Los Angeles. Sorry, Amanda. Sorry,
John. Not a ton of time, but I mean, you're nailing one of the key issues, which is that they can play with demand, not so much the supply issues. But we talk almost that we forget, of course, that rates were not anywhere near normal before this pandemic. So a whole bunch of other layered in stimulus happened. Is there not just an impetus inside the Fed to get closer to normal so that you have some emergency reserve for next time? Is that never in the conversation?
I don't think it's in the conversation yet, because there is such great anxiety about trying to get back to something like normal once more. Certainly that was part of the conversation when Janet Yellen and Jay Powell in his early year at the Fed were trying to bring rates back up, give them some ammunition for the next time. I think that's a debate for further. You have to start from where you are, if you get what I mean. I certainly agree that that's an issue, but it's probably an issue that's another year or so down the road.
John, thanks so much for joining us. Always a pleasure talking to you, as well as reading your columns. John authors there, Bloomberg opinion writer, who is out with a piece today, one of the most read pieces, Inflation Raises the Fed Leadership Stakes. That's Authors Indicators. We have some breaking news here, or in terms of Pfizer, we know that the White House is buying 10 million courses of the COVID pill. We told you this earlier, citing the Washington Post, and it looks like Pfizer shares are rising. For Amanda Lang, I'm Matt Miller. This is Bloomberg.
Esta operación definitiva para dar con la captura de este bandido la planeamos el 15 de octubre del año en curso. A las 8 de la noche en una guarnición de Bogotá nos reunimos con los oficiales de inteligencia de la policía, nos reunimos con los oficiales de planeamiento de operaciones especiales de las fuerzas militares y de la Policía Nacional, y es cuando se decide cambiar y darle otro salto a esta estrategia.
I was just finishing what you were saying, Tom. November 3rd is when the decision is. Just in case people got confused, I will. Just one more story, Tom.
Yeah, thank God for that.
We're at 137 right now. It's a weakness. Is this where they play the music and the Academy Awards? Is this it? Do I thank my mum again? Are you in charge of this?
Is she the only one?
Kill the music. You know who's in charge here.
Today it's a lot more about things like services. So people come because they want to find the local plumber, maybe a contractor, maybe it's a babysitter, and they tend to convert very fast. So we do well for advertisers, top of the funnel, brand, and then bottom of the funnel, direct response.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I'm Mark Crumpton with Bloomberg's First Word News. Bloomberg has learned the Biden administration plans to buy enough of Pfizer's new COVID-19 pill to treat 10 million patients. The pill showed extraordinary results in a clinical trial, reducing hospitalization and death by 89% among high-risk COVID patients. The company plans to submit data for the pill to U.S. regulators by the Thanksgiving holiday. Vermont Senator Bernie Sanders says he's working on a proposal to set an income threshold for an unlimited state and local tax deduction while letting high earners continue to deduct $10,000 from federal taxes as they currently can under current law. The Vermont senator says the income level for the SALT cap in his plan is still being negotiated. He has previously floated about $400,000 in annual income as the limit for unlimited SALT write-offs. In the UK, police are learning more about a suspected bomber who died when his homemade device exploded in a taxi outside a Liverpool hospital over the weekend. Officials say the 32-year-old was an asylum seeker from the Middle East who had converted from Islam to Christianity. Police are still trying to determine his motive and whether anyone else was involved. 4 men who had been detained were released. Britain's official threat level was raised following that blast. U.S. Secretary of State Antony Blinken will spend the next 5 days in Africa. He'll try to boost the so far unsuccessful U.S. diplomatic efforts to resolve deepening conflicts in Ethiopia and in Sudan and counter growing insurgencies elsewhere. He begins his trip in Kenya and will also visit Nigeria and Senegal. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
The most crucial moments in the trading day. This is Bloomberg Markets The Close with Caroline Hyde, Romaine Bostick, and Taylor Briggs.
It is 2 p.m. in New York, 7 p.m. in London, and we're live from Bloomberg's World Headquarters. This is Bloomberg Markets The Close. I'm Caroline Hyde.
I'm Romaine Bostick.
I'm Taylor Rigg. And the consumer carries on, guys. Stocks rise towards records after retail sales post their biggest jump since March. But can the economy continue to chug along as inflation looms over the consumer? Remain on those merchandise market winners. Taylor brings us the price pressure reads. We've got you covered. And inflation also raising the stakes for Biden's Fed chair pick. The decision is expected to come at any moment. How will the central bank address consumer prices, and how great of an impact can monetary policy have as supply chain pain persists? And we'll ask that question to one of the most prominent authorities on global commerce. Chad Epling, founder of and CEO of Momenta, is a company helping brands sell directly to consumers around the globe. He's going to join us. Well, that and so much more coming up this hour, man.
Yeah, nobody does the supply chain like we do here. We check here on the markets. You talk about coming into today, of course, you got relatively strong retail sales data. You had pretty strong earnings out of Home Depot and Walmart. You had the better than expected factory output data. And then on top of that, you had the home builder confidence, and you sort of add that all up. And you do get a little bit of a bid here into the S&P 500. You talk about 4,700. Remember, we crossed that 4,700 mark, a week ago Monday? Mm-hmm. And we were kind of stuffed back below it for the last 5 or 6 sessions here. But now back above it here on the day. I do want to point out real quickly here what's been going on in emerging markets, because this has kind of been a sleeper run here. You're talking about 7 straight days of gains right now on the MSCI Emerging Markets Index. It's not a massive gains. In fact, the biggest day was something like a 0.5% run up on Thursday, but all told, about 2% gain here. A lot of this obviously tied to the interpretation of monetary policy. We're going to talk a little bit, too, about the dollar. Dollar's been on a phenomenal run as well. You can see the weakness there in the euro, and there's your real yield right now on the 5-year, the belly, as they like to say, Taylor, 194. What a negative sign.
We're glad that you're here to discuss the belly of the curve when it comes to real yields. Let me circle back, Romaine, to really how you started this conversation. Some of the economic data, the big one, of course, being retail sales, gaining 1.7% month over month. But excluding autos and gasoline, which is the chart that we show here, that was a 1.4% gain, well ahead of the 0.7% gain that was anticipated. But this is very interesting. 2 key analysis that I've read from Wells Fargo and then Bleakley Advisory saying that since March, headline CPI has been at 4.4, retail sales are up 2.4. So you're actually down 2% adjusted for inflation. We know with some of these retail sales numbers, they are nominal, they are included in dollars. So I want to break down how much of this is inflation, how much of this is really the strength of the consumer.
Keeping it real.
You don't like that? Romaine doesn't like the chart.
I think maybe a bar chart.
A bar chart? All right, let's try this. Let's do another line chart. Switch up the board before Romaine walks off in protest. Is this chart any better?
No, it's something.
A break even?
I understand.
Belly of the curve?
I understand that.
Record highs?
Yeah. That's pretty
That's redundant.
Should win you back?
Records?
I like that.
Maybe highs? Caroline, save us.
Taylor, you always do great charts. Just nothing but love from me. Meanwhile, Kathy Entwistle, Managing Director at Morgan Stanley Private Wealth, is with us. Kathy, I mean, what do you make of this data, the read? I mean, Taylor telling us straight, factor in inflation, it doesn't look so pretty.
Okay, so your question is around inflation or the retail side? I apologize, Caroline.
Sorry, just about the read of the retail sales. What did you make of the numbers and how strong do you feel the consumer is?
Sure, absolutely. So I think the consumer is still buying and they're still very confident, but they are starting to spend their money, meaning they're almost finished spending their extra cash that's sitting on the sidelines. I think that we're going to see some changes going forward into 2022. So again, the numbers are coming out really great, but what we have to think about is forward-looking earnings and what we think the sales will be like going forward. And I do think we'll see some sort of a pullback. We're talking about, this great resignation and wondering where all these people who are no longer working, where are they finding their, extra savings going forward? So that could be an issue.
Yeah, I am curious. I mean, when you look at that retail sales numbers, obviously there was a big bump up that was sort of a result of inflation, particularly when you look at some of the food and energy components of that. There is a general sense, though, Kathy, that when you look at the market, the S&P or whatever benchmark you want to use, that it is sort of insulated to a certain extent from some of those inflationary pressures, and that if you want to sort of continue participating in this market, you can sort of pick out the sectors, you can pick out the stocks that'll sort of keep you, I guess, ahead of the game.
We are definitely in agreement with that. We think it is a stock pickers type of a market, and that perhaps indices aren't the way to go going forward into 2022. There are areas that we like better, and there are areas that are more well protected. And we have to think about inflation and rising interest rates and where we can find opportunities. So some of them are like financials and some of the typical ones that we've been speaking about, healthcare and so forth. Retail should hang in there as long as there are opportunities for people to shop. And if they're discounting or their prices aren't going up too high, I think that they, certainly can still withstand some of the inflation. But again, the issues that we really have to think about is not the transitory inflation, but the permanent inflation. And I don't see how you can increase somebody's wages and then pull those wages back again. So wages, labor, some of the costs of just doing business. I know, in my own world, we just know we have to pay people more in order to entice them to come back to work. So I think it's happening everywhere. Inflation is not something that's going to go away.
Kathy talked to us then about the rising rates that you mentioned and really the role of bonds in a portfolio. Is it just a diversification play, given if yields are rising, you assume that your bond portfolio loses money?
Yeah, that's a great question, Taylor. It's been it's been challenging for me to find fixed income type investments that make sense for the long term for clients' portfolios. So in the last couple of years, I've been looking for other types of ways to add value to clients through a fixed income sort of a lens. So whether that's adding individual stocks or companies that pay a higher yield and looking for some sort of a return that way. And as you know, dividends probably have been paying more than a lot of the fixed income, and you don't have that component of an inverse relationship where as interest rates rise, bond prices will go down. But stay really, really short, and then as interest rates start to rise, we can ladder into the market. I think that makes sense.
And what do you make of, you said, find value? I'm going to focus in on that word value. And is it time for value stocks to shine versus growth? You got Crescott Capital saying it's time for the great rotation. We keep having these mini rotations, and I'm wondering where we are in that dance.
It's a dance, right? It's been like a back and forth this year. First it's growth, then it's value, then we're back to growth again. So that was a little surprising this year. We were really expecting to see value take off a little bit more than it has. But it looks like it's going to be more about finding the right companies within the value or growth space versus a full value versus growth. We are tilting a little bit more towards value, but we definitely want to keep growth in the portfolio, and we definitely want to keep thoughtful, holdings in there versus the ones that have had the big run. We want to keep ones that are like growth at a reasonable price.
And what about alternative investments? What's the allocation there, Kathy?
We've been, for our clients who are into alternative investments that, have the ability to invest in alternatives, we're looking at increasing that number 15, 20% of the portfolio as a total, if not more. So feel very, very comfortable at this point having, close to 20% of an allocation into alternatives.
I'm going to steal Caroline Hyde's question. Does that alternatives include crypto? Mm-hmm.
That's a great question. I think that crypto is definitely something that everybody needs to look at and to consider, and it's certainly a personal decision. Crypto we see is about 3 times more volatile than the equity market, so you have to really understand that and be willing to take that volatility as it comes. I would also say I'm seeing a lot of the younger people put a lot of their money into crypto, and it's almost like all on one investment or all money in one area. And I would just caution anyone who's thinking about going all in on anything to think twice, because it's just that much more risky to put everything into one type of investment.
All right, Kathy, always great to catch up with you. Kathy Entwistle there of Morgan Stanley Private Wealth. I want to bring you some breaking news crossing the wire. This on those website outages that we reported on a few minutes ago. We're now learning that this is related to Google Cloud outages that were caused by a, quote, bad network configuration. This is according to a person familiar with the matter, and says that the issue should be resolved in 35 minutes. All right, we'll keep digging into that, but we got a lot more coming up on this show. A lot of suspense right now over the next chair of the Federal Reserve here in the U.S. with inflation rising. With the president keep Jay Powell, or is he going to go with Fed Governor Lael Brainerd? An announcement said to be imminent. We're going to discuss the latest. Plus, Home Depot shares surging here to a record high on home improvement demand and better margins. Meanwhile, Walmart going in the opposite direction on issues with regards to its supply chains and its margins as well. We'll discuss, and we're going to get more insight on the supply chain challenges from Chad Epling. He's the CEO of Momenta. The company helps brands sell directly to consumers globally. We have all that and more coming up later in this program, but we do have a special programming note. We want to bring your attention to our 4th annual Bloomberg New Economy Forum, which is happening through the week. We're going to share face-to-face discussions among world leaders on topics ranging from finance, trade, and climate to cities and health. The Bloomberg New Economy Forum starts shortly.
such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
It is really still day one for AWS and for our customers. It is still so early in this business.
No matter how this comes out, there'd be a lot of continuity in Fed policy. Both of these players have, long track records at the Fed. So certainly it's a big committee. Also, I think people have to keep that in mind. And there's a lot of experience on the committee. So I think we'd see continuity.
That was St. Louis Fed President James Bullard discussing the future of the Federal Reserve. And you also have the Senate Banking Committee Chairman, Sherrod Brown, hinting that Biden has already made his choice on who will be that next Fed chair. And an announcement could come at any moment. Here to break it down for us, Bloomberg's Washington Bureau Chief, Peggy Collins. And Peggy also hinting that both of them would have the votes to likely get through an easy confirmation.
That's right, Taylor. That's fresh reporting from Capitol Hill today from our colleagues Steve Dennis and Laura Litvin on the Hill, who have been asking senators in the hallways about the Fed nomination. And as you said, Senator Brown is saying that he thinks they have the votes to get either Powell or Brainerd through a confirmation process. But also we have reporting that as recently as today, Ohio Republican Senator Rob Portman is saying that his pick is Powell, and that one of the reasons for that is on his outlook for inflation. And, we are seeing a lot of people become more and more concerned, not only policymakers, but also American people writ large about inflation and prices rising.
Certainly, it's sort of an extraordinary time not to have much clarity on where the Federal Reserve is going to be led from when we are still sort of so jumbled with economic reads. How important are things such as, diversity to those hiring in the Fed at the moment?
I think it is one of the key things that they are looking at in terms of diversity at the Fed, and that being important to them. I think, of course, how this person would lead the economy when we aren't fully through the pandemic. It's certainly in terms of full employment, which is one of the Fed's mandates. The jobs market is doing better, but is still recovering. And then, of course, inflation has certainly lasted a lot longer than most people at the Fed expected. And that is a hot button issue right now in terms of you have people at the Fed like Jim Bullard, who really think that the Fed needs to speed up its tapering in order to get ahead of that. And then others like Neil Kashkari in Minneapolis, who are saying most of this will go away on its own as supply chain issues, mostly related to the pandemic, ease up.
Some of these are short-term issues, Peggy, and if you're going to select a Fed chair who's going to be there for years, you also have to focus on some of the long-term issues. And there was a lot of talk, at least prior to when these latest inflation numbers came out, that the Biden administration would be a little bit more focused on bank supervision and what at least it characterized as some of the deficiencies in Powell's oversight.
That's right. Financial regulation is a big touch point for them in terms of they feel like some of the regulations were sanded down under the Powell tenure and Randall Quarles, who was vice chair of supervision. So that's a big question and an open seat. As Caroline was saying, it's not just the Fed chair seat that's open. We've got 3 other seats in play that the Biden administration has a chance, an opportunity to reshape the Fed with. But also we're getting closer and closer to the time when a lot of those positions are fully open, and at a time when the economy is seeing some serious headwinds with inflation.
Peggy, it was interesting. We also heard from Treasury Secretary Janet Yellen sort of hinting that continuity might be good to avoid the appearance that this is also becoming political, and we don't want to politicize the Federal Reserve. What are the arguments for that?
So that's a great point, Taylor. There is this argument because Trump broke with tradition of past years where the incoming president would stick with the current Fed chair. So people like Bernanke, Volcker, they stayed on for presidents that may not have picked them or elevated them in particular. But Trump broke with that tradition when he elevated Powell to the chair seat versus Yellen. But from what we've reported, Yellen's perspective is that continuity at the Fed is important and that the Fed isn't politicized and that it maintains its independence. That is important to her, we've reported.
All right, of course, still waiting on some sort of official announcement. Peggy, be sure to call us first before you talk to anyone else once you get that announcement. Peggy Collins, of course, our new Washington bureau chief. All right, coming up, we're going to talk about Walmart. We're going to talk about Home Depot, both going in opposite directions despite some relatively strong numbers, at least on the top line here. But you're actually looking at a day where Home Depot overtaking Walmart in terms of market cap.
Don't front run my chart.
Oh, is that your chart?
That's my next chart,
right,
Romaine.
well,
Mind-blowing, though.
It will sparkle. I'm sure it will. That's coming up next, right here on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
In London, in Sydney,
in San Francisco,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this
how
story.
are you thinking about those dynamics? Let's see if Romaine approves of this chart. Take a look at what we did in the terminal here, you guys. It was really interesting, given what Romaine was saying is pretty decent reports on both ends. You have Home Depot, now a bigger company by market cap than Walmart.
How is that possible?
I know. To think. And what's incredible is Walmart, of course, is in white, and Home Depot has been slowly making gains. It really has been this do-it-yourself model that has just sort of come out of the gates in this pandemic and proven to be a tried and true model. Let's do all of this and more with our Bloomberg retail reporter, Brendan Case. And Brendan, I guess first talk to us about Home Depot and the consistency of this housing market to continue to prove resilient.
You know, there have been a lot of concerns that at some point people will stop spending so much money on their homes. And if Home Depot's report tells us anything, it's that spending is still going strong. Not only that, but they've got, a fair amount of pricing power, especially compared with a company like Walmart. And their report came in and just sort of knocked people's socks off.
Yeah. Well, talk about the Walmart side of this, because, we heard from the CEO, Doug McMillon, on the conference call. He kind of made the point that, look, Walmart is about low pricing and that they are going to stick by that. The idea here is that's what customers come to expect. And he seemed to imply, he didn't say this explicitly, that they might actually have to eat some of these costs in order to sort of stay true to that ethos.
He sure did. He said that Walmart's seeing more cost inflation than price inflation, which, in other words, its prices are not keeping pace with the increase in costs. Now, there's a couple ways to read that. One might be that it's not expecting inflation to be super long-lasting and will come back to somewhat more normal levels, soon-ish. Another way to look at it is that it's a competitive advantage for Walmart. It's possible that they will, eat some of that, gain some customer loyalty, and increase the price gaps between them and the competition, which is something that was a weak spot for them actually during the pandemic.
And take market share. Meanwhile, we've got Lowe's tomorrow. How much are we expecting the pie to be big enough to benefit both Home Depot and Lowe's as we're all out there trying to buy lumber that's gone down a bit in price, but perhaps that all our furniture that we're still waiting to come across the rivers and indeed train tracks to us with the infrastructure issues?
Yeah, but generally speaking, Wall Street's expecting a pretty good read-through of Home Depot's results to Lowe's. In other words, they're expecting a pretty decent report. Obviously, we'll have to see what's in the report. There's no telling whether there'd be some surprise. But, one advantage that those companies have compared with Walmart or companies in the grocery industry is just a lot more pricing power. It's sort of the two big guys, a few other big players. And it just sort of gives them a little more leverage, a little more ability to keep up with inflation than you might be seeing at some of the grocers.
And the overall read coming off the big retail sales numbers this morning is that the consumer does indeed remain healthy and strong.
There was a lot of worry that as the pandemic era stimulus programs, the big ones, would wane. The idea was that you could see that filtering through to consumer spending. So far, that just hasn't happened. And if Walmart's expectations are anything to go by, the outlook for the holiday season is pretty good. Now, that's a watch item for sure, though, especially next year. Consumer sentiment has already taken a pretty big hit, and it'll be pretty interesting and potentially, significant to see if that actually filters through to what people are willing to do with their money.
All right, Bloomberg's Brendan Case, of course, giving us that update on two big retailers out with earnings here, going in different directions with regards to the stocks. Home Depot, actually the second biggest mover in the S&P 500. Meanwhile, Walmart, second biggest decliner, at least on a points basis on the S&P 500. All told, though, we're still higher here on the day. A lot of the tech stocks helping to keep underpin this move higher, including Tesla.
Yeah, and notable that NASDAQ currently your outperformer, the Russell 2000, the small caps not doing so well. Is an ununch kind of, it's actually kind of day for you.
I know we're so used to these 9 basis point moves on a day that Romaine, you
almost
bored?
makes you want to go back to being a bond trader, doesn't it?
Is there at the moment amongst the asset managers that actually some of the ESG labeled products, then if you probe, are not green?
Well, look, there is some stress, and it's great that there's that scrutiny, and there's that skepticism or healthy skepticism about ESG labels or sustainable labels. And that, again, is one of the reasons we're having this ruthless, relentless focus on net zero, because in the end, look, we can't stabilize the climate unless we get to net zero. And it's as simple, these are hard numbers. Your emissions are either A or B, they're going up or down, and if they're going down, are they going down consistent with the science? We anchor it in the science, the same science the UN and others use for the 1.5 degree objectives.
Should this not be compulsory? Should we not have regulators coming in and saying, look, this is a new definition, you stick by it, and we're going to measure it?
So I think it's a great question. So let's look at what happened with TCFD, climate disclosure. 6 years ago, you and I were in Paris. We talked about this. We talked about other things. Now that's moving to become mandatory.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
On the supply chain, are you starting to see things improve? And if you are, where specifically, sir?
Well, this year we have been mostly affected by the semiconductor situation. And we believe that the quarter three was the quarter that was most affected.
I'm Mark Crumpton with Bloomberg's First Word News. We're learning more about President Biden's virtual summit last night with China's Xi Jinping. U.S. National Security Advisor Jake Sullivan says the leaders spent a good amount of time talking about Taiwan, and that he says the president recommended that President Xi reminded President Xi that he voted to support the island's self-defense when he was in the U.S. Senate. China's readout of the summit said President Biden opposed Taiwan's independence. At least a dozen states have filed or joined lawsuits seeking to block a federal vaccine mandate for employees at hospitals, hospices, skilled nursing facilities, and home health agencies. A complaint filed in Louisiana calls the mandate, quote, a one-size-fits-all sledgehammer. Opponents also say the requirement will worsen staffing conditions as more employees quit their jobs rather than get vaccinated. A New York City tradition will return this year. Mayor Bill de Blasio says Times Square will be open on New Year's Eve to anyone who is fully vaccinated. The move is a return to some level of normalcy. Last year, the celebration was limited to frontline workers. Mayor de Blasio said today he wants to show the world that, quote, New York City is back. Citadel has promoted Pablo Salomé to co-chief investment officer. The former Goldman Sachs executive will take over the new role on January 1st. He's replacing James Ye, who is leaving the company. Citadel says Salomé will share the title with founder Ken Griffin. He'll help oversee Chicago-based Citadel's $43 billion in assets, a figure that surged from $27 billion in 2018. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
This is Bloomberg Markets, the close, a little after 2:30 here in New York. Let's get you caught up on what's happening in the commodity space. NYMEX crude futures right now look like they're going to settle below $81 a barrel. You're seeing softness here for another day here. Of course, you have a lot of talk right now about, I guess, the ramp up in production in the Permian Basin. A lot of concerns here that the Biden administration might release from the Strategic Petroleum Reserve and OPEC Plus nations, saying that we could actually be in for oversupply. And that's really keeping a lid right now on prices. Meanwhile, Trafigura actually says things could go in the opposite direction. You still got tight supplies out there. That could actually push us up to $100 a barrel. You are seeing gasoline futures higher here for a second straight day, breaking what had been a downtrend here. And keep an eye on what's going on with natural gas prices, which are really up again. These are Dutch prices you're looking at. If you're in London, it's a similar story here, 18% here on the day. This is the biggest one-day gain we've seen going back to those early October, of course, when this was kind of the norm. A lot of this, of course, has to do with the German government basically putting, at least for now, a halt on that Nord Stream 2 pipeline certification. This is less of an issue about whether it will get approved and more about when it will get approved and whether it will get approved in time for the winter season. We already know supplies out there already short, Caroline.
Yeah, phenomenal moves in natural gas. And really this speaks once again to the issues that so many companies have been feeling. Remember, those gas prices have caused many an industry to sort of turn off the switches, to stop producing because energy costs have got so high. And in fact, at the moment, many companies are feeling the pinch from strained supply chains as well, remember. But our next guest says many of his international brands are experiencing a perfect storm, including suppressed local currencies, difficulty sourcing affordable raw materials, and an increase in the cost of those shipping containers. For more, let's bring in Chad Epling, his founder founder and CEO of Momenta, a global commerce platform that helps brands sell direct to consumer on digital sales channels globally. And fantastic to get your perspective here, because you're working across 70 countries, servicing 260 plus digital sales channels, Amazon, Rakuten, Walmart and others. What's sort of the narrative that threads through all of your customers at the moment? Are they all finding it tough?
Yeah, I think it's more difficult for brands, international brands, brands that are based in Brazil, brands that are based in India, that are starting with a suppressed local currency. So playing on the international stage is increasingly problematic. So, like you mentioned in the opening, having a suppressed currency and then having to source raw material from the global markets, and then the 10x container costs is an issue. But it's across all of our brands, really. We have some consumer electronic brands that are having to source different parts and materials from different parts of the world to create new product lines. So it really runs the gamut, but everyone's feeling the pinch.
Yeah, I mean, and then this really becomes a logistical nightmare kind of planning going forward. Obviously, you have the holiday season, but a lot of hard decisions about inventory levels, pricing levels, and whether you can think that maybe this supply chain issues might actually be, if not resolved, at least minimized by next year. What do you advise them longer term here? Do you make big structural changes now, or do you ride this out?
Yeah, it's a good question. I think there's a couple bits that we guide our brands on. In the immediate term, nothing's going to change going into holiday. People are pretty generally locked in. Brands are locked in with the way the structure is in place. I would say that the guidance that we're putting in front of our brands is to try to stretch the inventory out that they actively have on the shelves now, because there are other downstream ramifications to running out of stock on marketplaces like an Amazon around the world, or Lazada in Southeast Asia, or Rakuten in Japan. Some of the algorithms that are in place when you're low or out of stock can lower the ranking of your store. It can ultimately create some issues downstream that are equally as problematic. So we're guiding our brands now to cut their marketing efforts, to be able to stretch the product sales out so they can breathe a little bit more into next year and see how things open up.
That's very interesting about the algorithm and the inventory levels. I hadn't thought about that. How are you thinking about loyalty as well? If you go and a brand doesn't have an item that you want, does the customer lose interest, or is the customer brand loyal that they will wait or return to that item?
I think it depends on how well known the brand is. So the brands we work with fit a few different brand profiles. So they're either large multinational brands that have grown around the world through acquisition or brick by brick, but they're well known in many markets. And then there are also mid-market brands that have aspirations to be global, but aren't terribly known. But people are searching for products like a teeth whitening or a certain type of headphone or things that products do. So for the well-known brands with a high branded keyword search volume, I think people will wait for those specific items. If you're trying to fill a specific need or void for a thing that a brand can do, you may be able to find a quick alternative online.
It was interesting, of course, it was previous earnings where we had, at the start of this earnings season, Snapchat coming out and Snap falling so hard because they were experiencing a lack of marketing spend. Companies were holding back as they were worried about the supply chain effort. From your perspective, who is this hurting in terms of where the marketing spend goes to? Is it online that they're pulling back on? Is it overall just updating their marketing messages? What is it that gets cut back, Chad?
Yeah, it's more of a media spend and top of the funnel awareness that we're suggesting to cut back on. So, we are bringing brands from many markets around the world into the U.S., into other markets. We're sourcing U.S. brands to go outbound into the world. So oftentimes when you're entering a new market, it's that top of the funnel general brand awareness that we're tempering, through the holiday season, specifically for the brands that have a limited amount of inventory that we could run through over the next few months, but we want to try to let it stretch for the next 6 or 9 months. The reduction in marketing spend, we'll be able to put it towards extra warehouse time and these things. So, the math works out to allow the brands to live to fight into Q1 and Q2 of next year.
Do you think there is any legitimacy to this idea of, I guess, onshoring more of our manufacturing here in the United States, at least at scale?
Yeah, we focus a lot on countries that have a creator culture. So it's not just the U.S., but India is this way, Japan is this way, South Korea is this way. So brands that are being, from the ideation stage to the creation and manufacturing to being able to sell onshore, I think it's a brilliant idea, So, but you can kind of step into this because some brands that we work with and that we support, they're sourcing everything out of China and or a few set dense, regions of the world where they're pulling product out of. So we're trying to guide them to stop at ports along the way. So, in general, there's capacity around the world. There's capacity in Singapore, like as an example, they're just building now a $20 billion container terminal to be able to accept more product, more things that are coming into the market. Where, going into the U.S., things are obviously jammed up with things that are happening here. So I think it's a little bit of a hybrid. It's, can we source more here in your domestic market, U.S. or any other market around the world? If you're sourcing from international markets, instead of focusing your efforts and concentrating on just the big markets, try to diversify next year and into 2023 as well. Instead of just being in the U.S., spread some of your product into Japan and South Korea and Southeast Asia and Australia and New Zealand and other markets where you're not jammed up when you can't get your product into one. You can find alternative paths to different consumers around the world.
Yeah, on that note, are you telling companies or companies asking, not from the sourcing side, but from the customer perspective, don't put all your eggs into trying to sell to a U.S. consumer or sell to a Chinese consumer? If things are made over there, then you don't have to worry about the imports and the exports.
That's exactly. It's really just hedging your opportunity and your options. So maybe it's selling domestically if it's made in China, but certainly selling to countries around China where it's less of a hop. So a number of our brands are experiencing 10x the cost of containers. I mean, you hear this a lot on different news outlets. And if we can cut that down to, instead of going from China to the U.S. or other parts of the world into the U.S., maybe it's a shorter hop going into some of these domestic ports. The buying power is just as strong in these other international markets. So the big story is diversification to other global markets.
All right, great stuff, Chad. Really great insights. I hope to catch up with you soon for an update on where we stand. Chad Epling there is the founder and CEO of Memento, which is a big global commerce platform that kind of helps these brands, I guess, just figure out the environment that we're in. All right, let's try to figure this out. We're going to talk about shares of Peloton. They're selling $1 billion worth of shares. Normally, that would send the shares down, but apparently, I guess people are excited because someone was willing to buy those shares. So I guess that's a positive. And apparently Caroline's been riding her bike more. So maybe that's the impetus.
That's the tell. Yeah, I'm the canary in the coal mine.
You are. Did you ride this morning?
No, last night.
Okay. Well, that's good. All right, look at that. All right, coming up next, we're going to find out a little bit more about Caroline's workout habits. And we're going to talk about Peloton. It's our stock of the hour. This is Bloomberg.
common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector, in Scotland around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
You finally got your taste of MIT, so why did you decide to leave MIT and come in and run the SEC?
One, when a president asks you to do something, it's really hard to say no. But it's also just an incredible privilege and an honor to serve.
All right, time now for our top calls to look at some of the movers on the back of analyst recommendations. First up, let's take a look at Avis Budget Group cut to underweight from equal weight over at Barclays. Analysts citing the stock's expensive valuation amid increasing competition. Investors say they don't care. Shares up 2%. Next up, Southwest Airlines downgraded to neutral from buy. This over at Goldman, with the analysts expecting greater cost pressure to weigh on the company's profitability. Southwest Airlines shares down about 3% on the day. And finally, let's take a look at Robinhood. It's actually got cut to neutral over at Atlantic Equities with a $35 price target. Now, the analyst is saying that the company's pause in its user growth in the third quarter should be cause for concern here for investors. You see, selling off just a little bit here, down 3% on the day. And those, Caroline, are some of our top calls.
Meanwhile, let's look at another key corporate mover on the day, and it's a bit of a head scratcher. Time for our stock of the hour. Peloton shares flying after the exercise equipment maker actually priced $1 billion of its shares at about half of the stock's level just 2 weeks ago. Bloomberg's Gupta joins us now with more, up 14%. But I thought the CFO was busily telling us that they didn't need to raise any capital.
Yeah, so she says. And then they come out and offer $1 billion of stock, essentially. But here's why the shares are up, because traditionally that would mean pressure on the stock. Yeah. The shares are up because they were actually oversubscribed. They had net proceeds, or expecting net proceeds, of $1.1 billion, which really tells you that there is an investor base out there that's into buying these shares. So that's really where you're coming from. But like you said, a 40% decline in the last 2 weeks as they cut their outlook just a couple weeks ago, saying that pandemic boom, well, it's not really going to last into this year or into next year. But let's talk about the offering specifically. 23.9 million shares priced at $46 a share. And like I said, that really does suggest there's more demand, but it's really about where they've been. Because like I said, like on that chart.
This is the chart.
Wow. 64%.
Because when you see the pop today, this all puts it into perspective.
Yeah, and even with today's gain, Peloton is still among the 5 worst stocks in the Russell 1000, really one of the laggards for the year. But going back to your point, Caroline, they do actually need the money, because if you look quarter over quarter at their cash flow, they're declining very, very quickly. A $680 million drop in just the last 2 quarters. So they could use that $1 billion.
And it was interesting. This all comes after earnings, where subscribers looked good, but we were all sitting here around the table and the focus was on the engagement, or maybe the lack of engagement. What are some of the indicators to show some of the positives and maybe some of the drawbacks?
Right. Well, there's 2 ways to look at it. Well, starting with subscriber growth, right, which is up 7% year over year. But compare that to the 12% before, it's actually a decline. You're seeing that deceleration in subscriber growth. But like you said, it's about the usage. In peak pandemic, it was 26 workouts per month. This is my favorite statistic. And now it's about 15 average workouts per month. Really? So people are using the Peloton.
But it's
I
going
guess
down,
so.
right? I don't know. I mean, are people? What are they doing?
drinking.
Are people just not exercising?
They're out at the bar.
Isn't
drinking.
this exercise?
Commuting,
Exercise
going to the
season.
gym, running marathons.
You can wear larger clothes now. It's winter, so legitimately it's not workout season.
No, speak for yourself. All right, Peloton, our stock of the hour. Kriti Gupta, of course, giving us that update. Stay tuned. We're going to continue on talking about fitness here, getting that body, beach body, getting hit with some downgrades today after cutting its full-year revenue guidance. We're actually going to hear from the CEO and chairman in just a minute here to talk about whether, I don't know, have people given up on staying fit?
Can I complain that every time I try and download a new app, it tells me to lose weight?
Oh, that's not nice.
Wow. What kind of apps are you downloading?
Wants me to download all these
We should point out here, we have pictures here, of course, of President Biden, who is in New Hampshire at a bridge to sort of highlight his infrastructure bill. We'll keep an eye on that to see if any news breaks out of that.
This is Bloomberg.
Engine number one was able to do on the Exxon fight. It opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that is either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in Engine Number One on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social, worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year. Yeah. And so our approach is to use the vote and engage with these companies over time.
But that's always been the case. I mean, at least in theory.
Mobile app is doing exceptionally well. So let's talk about the paid users for a moment. Our strategy has been to create value-added experiences that our users want to pay for, that adds value to their experience.
A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I want to take a look at another big stock mover on the day. Shares of Beachbody, of course, under a little bit of pressure. I was reading through the third quarter press release, Caroline, and really the company coming out in full honesty about a cut in some of that 2021 revenue guidance, talking a lot about some of the product launch delays, given just a challenging consumer demand and media environment. We've talked a lot about sort of people maybe returning and going back out, right? Maybe we're going to the bars after work instead of going and doing some of our at-home fitness demand. The company highlighting some of the softer than expected at-home fitness demand.
Yeah, maybe you're going out to a gym instead. Let's confront this with the man in the know, Beachbody CEO, chairman, co-founder, Carl Daikeler. It is great to have some time with you, Carl. And I mean, up front, when your shares are down 20%, it's got to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution, fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
Let's talk a little bit more about how you do that and how you sort of build not only a brand, but I guess an ethos that goes beyond just say, having nice abs or whatever the sort of short-term goal is. We've seen other companies come into this space and do that, try to sort of build a lifestyle brand, if you will. In this environment here, what's the value proposition to a customer for a Beachbody?
Well, look, the most important thing is results. That's what this company's been doing for 2 decades, is focusing on how do we meet a person where they are and make sure that they've got skin in the game, so they're stepping up for themselves, and then surround them with support and accountability so that they get the results, and then they become a walking billboard for what they experience with Beachbody. I'm actually standing on a set where for the first time ever, we've just brought in this connected bike, so we've got a bike similar to Peloton, which you mentioned, but the difference is we actually feature our subscribers in a patent-pending technology so they can see themselves and get cues and encouragement and motivation right from the trainer on here on set. So what we think the value proposition is feeling connected to this overall community, and again, that translates into consistency so that they don't fall off, they don't quit, even if it's the third quarter, and especially as we go into the first quarter, we want people to be excited about the prospect of 20 minutes, 30 minutes, staying consistent to get healthy.
Of course, on your way to getting healthy, you actually have to have the product itself. And you mentioned, of course, some of the product launch delays, maybe some supply chain challenges as everyone else is facing as well. How much of that is in your control, and what are you doing to control the outcome of that?
Well, that's what's lucky about our business model, is we aren't as reliant on the equipment for our revenue and performance as other companies. Content is easy to scale, and that's one of the reasons that we got into the business that we did. So we're excited about having the bike. The problem was, and I think what the market's reflecting today, was about a 4-week gap between our ability to launch the bike into our 3 million subscriber ecosystem with the content going with it, because we wanted this whole experience to be immersive and exciting. That delay cost us our results in the third quarter. As we go into the fourth quarter, and more importantly, into the first quarter, we've got this great content library and new launches coming almost every month so that people can engage in this new variety, the excitement of new content, so that they get results. And that's what Beachbody brings to the table: fitness, nutrition, and community. And that's got no supply chain problems.
All right, well said, Carl. We're going to have to leave it there, up against commercial break here. Carl Deichler there, Beachbody CEO, co-founder, and chairman here. Keeping an eye, of course, also on the president out in Manchester, New Hampshire, pitching basically the virtues of his Build Back Better plan, as well as that infrastructure bill, standing on a bridge there in New Hampshire to highlight what he says are much needed infrastructure repairs here. Also keep an eye here on the market as we get ready to reset, count you down through the final hour of trading. S&P 500 right now up about 0.6%.
It looks cold out there, but it's heating up on the Nasdaq, up 0.8%. That yield, Taylor?
Climbing just a little bit, 2 basis points. We'll take it. This is Bloomberg.
There's a pretty good chance that you use products made by Meta every single day. If you've never heard of Meta, that's because it's the new name for Facebook Inc., the parent company of Facebook, Instagram, and WhatsApp.
All right, perfect.
In a spiffy presentation on Thursday, Mark Zuckerberg showed off his vision for what he's dubbing the metaverse. That's a sort of mix of augmented and virtual reality worlds which will let the user explore virtual ecosystems. Much of what he showed isn't yet available. It's really his vision. In that sense, it was more like the sort of presentation Elon Musk does, where he looks at what he hopes might happen one day, than what Steve Jobs does, or Steve Jobs did, which is showing off products he already has available. He also, in the course of it, announced a name to Meta. The company will be called Meta from now on.
Our mission remains the same. It's still about bringing people together.
That's an effort partly to show the vision for the future, but also a way of casting adrift some of the toxicity associated with Facebook. But if this new company is going to be a success, or the new company vision is going to be a success, he will still have to deal with a lot of the same challenges that Facebook has faced. Concerns about privacy, content management, those are going to be just as pertinent, if not more so, in the metaverse as they are right now on Facebook's existing apps.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
I'm Mark Crumpton with Bloomberg's First Word News. The jury in the trial of Kyle Rittenhouse has begun its deliberations. The 18-year-old killed two men with an assault rifle at a Black Lives Matter rally last year. He's charged with counts ranging from reckless endangerment to intentional homicide and could face life in prison without parole if he's convicted. The August 2020 shootings in Kenosha, Wisconsin came amid social upheaval across the United States after the murder in Minneapolis of George Floyd by police. Bloomberg has learned the Biden administration plans to buy enough of Pfizer's new COVID-19 pill to treat 19 or 10 million patients. The pill showed extraordinary results in a clinical trial, reducing hospitalization and death by 89% among high-risk COVID patients. The company plans to submit data for the pill to U.S. regulators by Thanksgiving. Turkey's foreign minister said today his country is ready to offer whatever support it can to help mend relations between Lebanon and Gulf Arab nations who are embroiled in an unprecedented diplomatic rift. Mevlut Cavusoglu made the remarks during a visit to Beirut, where he met with his Lebanese counterpart and with the country's president. Lebanon spat with Saudi Arabia and other Gulf Arab states unraveled late last month and has threatened to destabilize the new Lebanese government and escalate the country's economic tailspin. It erupted over comments by a Lebanese cabinet minister over the war in Yemen that angered Saudi Arabia. Nearly 300 people trapped overnight in their vehicles by mudslides on a highway in British Columbia have been rescued and flown to safety. Crews are still trying to determine if anyone was swept away in the flow of debris set off by torrential rain. Multiple highways in British Columbia were closed due to the downpour. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
The most crucial moments in the trading day. This is Bloomberg Markets The Close with Caroline Hyde, Romaine Bostick, and Taylor Briggs.
Counting you down to the close as an hour to go on this day of trade.
And it looks like equity's trying to get a little bit of their mojo back today.
They are. There's a little bit more green than there is red on the screen, at least when you take a look at the sector level. Some of this appears pretty risk on with some of the discretionary energy industrial names. That's that reflationary name on top. But really, Romaine, when technology is at more than 1%, you have to get excited about that, too.
Yeah, and you talk about some of the individual movers out there. We talked about it last hour. Home Depot and Walmart both reporting earnings. Overall, the comp sales were good, but some concerns here about how each of these companies are dealing with some of the rising costs. Apparently, Home Depot, bigger ticket items being sold here, bigger tickets overall, bigger transactions. Meanwhile, Walmart says it's going to hold the line here on pricing, saying that basically its costs are rising more than its prices. But the CEO seemed to suggest, well, it doesn't plan to change anything. Its customers expect low prices. He basically said he's going to try to stick by that. Tesla shares higher here on the day, despite another share sale from Elon Musk, $7.8 billion all told right now in value of shares that he's sold since that big tweet about a week ago. And keep an eye on Activision Blizzard. The shares are down here. Remember, this company got sued by a California government agency back in July for sexual harassment and discrimination claims. The company has denied that. There's a new Wall Street Journal story basically alleging that the company's CEO knew about some of these allegations much earlier than what was alluded to. The company did put out a statement calling the Wall Street Journal misleading and said it stands behind the CEO, Bobby Kotick. Nevertheless, some employees have said they plan to stage a walkout today. A lot of drama surrounding this company. It'll be interesting to see how all this shakes out.
Yeah, indeed, and how the gaming industry as a whole reacts. Meanwhile, what's interesting is some of the bullish conviction that's still out there in the markets. We've been sort of tossed and turned around by strong economic data. We're fearful of inflation, what the Federal Reserve is going to do, who's going to be nominated to the Fed. Amid all of this, in fact, global fund managers have not been this bullish on U.S. stocks since August of 2013. This is the Bank of America Fund Manager Survey saying clients are convinced that inflation is transitory and they expect that the Federal Reserve to remain well behind the curve. Well, that's a good thing or a bad thing for them behind the curve, but Michael Hartnett's putting it there. And in fact, Goldman Sachs, interestingly, saying that, look, there's real commitment in the options market as well. Very bullish signs. Sometimes a little bit unnerving, Romain.
Now, let's get a little bit more insight here from one of our favorites, Catherine Rooney-Vera, head of global macro and chief investment strategist over at Baltic Capital Markets. Catherine, always great to have you. Always great to get your insights.
Thank you.
We're at a time right now where I think everyone's trying to figure out here, are we sort of setting up for another leg of this bull market, or should we all sort of be, ducking under the covers because of inflation and supply chain issues and all the other drama going on around there? Do you have confidence right now in, I guess, some of the price action that we've been seeing in the market?
I have confidence, Romain, in that the Fed's going to continue to run policy hot and let inflation run for the foreseeable future. So in that sense, yes, risk on, stay long risk assets, keep searching for yield, look at emerging markets for the next 6 to 10 months, Romain, I would say. I mean, the Fed gave us a pretty clear time frame in terms of when they think inflation, or specifically Jay Powell did in his press conference, specifically when he expects inflation to start to decelerate. He said 2Q, 3Q. The risk here, of course, is that inflation either accelerates beyond their measure of control or that the market loses confidence in the Fed's ability to tackle inflation. I think both are real risks. Inflation is being allowed to run very hot, bringing with it its own systemic risks and its own inherent risks to economic growth.
Gold has been catching a bid as we worry more about inflation. Are you hedging out the inflation risk in any way, Catherine?
Absolutely. We have been for the past year. Actually, we at Baltic a year ago said that inflation would be the principal risk for 2021, and we have been right in that. Inflation has been the principal risk, and we said a year ago, start to hedge with inflation trades, buy gold, buy commodities, buy energy, buy sectors in the U.S. that are inflation plays, and they have done phenomenally well. The question now, Caroline, is where to from here? And I think we still have upside with regard to inflation and equity prices. The risk in the back end of next year, I think, is that the Fed comes to a realization, the Fed or markets, either one is bad news. The Fed comes to a realization that they have to jack up interest rates, and we could be seeing interest rate hikes faster and in bigger magnitude than what is currently priced into the market. Or alternatively, inflation remains persistent, driven, Caroline, by the labor market, which the Fed has very clearly said is not the principal driver. But perhaps they're mistaken in that, right? And the market says, you know what? We don't think that you guys can do this job now. So a loss of confidence by the markets and the Fed's omnipotence or infallibility, I would even put it, with this, complacence in the markets with regard to the Fed's ability to do it all, I think is an inherent risk. And I'm telling our clients to protect against that. Buy gold, buy cryptos, buy alternatives, buy real assets, buy land, buy real estate, things that you can protect yourself against the potential for stagflation, which I think is a real risk next year.
I didn't hear bonds in that list that you just mentioned. What's the role of that in the portfolio then?
Yeah, bonds probably are not going to be the best bet, right? I mean, if you're expecting inflation to go higher and the Fed is going to either be behind the curve or have to increase rates, fixed income is not our major overweight. If you're a dedicated fixed income investor, though, Taylor, we recommend shorter duration, floaters, some specific timely names in the quasi-sovereign space in emerging markets. There's still some bang for your buck you can get there. But certainly if you're expecting or you think the risk is high of a stagflationary scenario, you don't really want to be there. I think what we're talking about here is finding places to make money in an inflationary environment with rates rising, and that's banks, that's industrials, that's materials, that's energy, even green energy, which has done remarkably well since we've recommended it. But look, you want to protect against the downside, and that's where you have some cash, raise some cash, get some gold, get some of those really defensive asset classes that can help you weather the storm.
Assuming we do get some sort of rate normalization here, Catherine, and I know that the Fed seems to kind of wave us away from that for now as it tries to sort of start this taper. But let's say we get to 2022 and we finally start to see rates come off the floor here. Is there sort of a time period or that you anticipate that it will take in order to sort of reach whatever that sustainable rate is going to be, and how should investors prepare for that?
The sustainable rate in terms of the Fed funds, I assume, is what you're saying.
Yeah.
And it depends, of course, on where we are in the inflationary environment. If, in fact, the Fed is wrong in that there is a wage price spiral. And anecdotally, anyone can pull out an anecdote about how, there's so many jobs available, their wages are rising, employment, you can't find people to fill the job. So I think one of the real risks here is that there's a more persistent demand-driven component to inflation that the Fed is underappreciating. And if that's the case, Romaine, then I do think that we could see rates move towards the 3%, 3.5% rate. We're at zero now, quicker and faster than what is appreciated by the markets today.
Catherine, just lastly, you said you're hedging out some of the inflation risk. You got that call right. Anything else you're doing with your portfolio at the moment?
Yeah, right now, because risk is on and the Fed is basically giving a pass to inflation rates for the next 6 to 8 months, there are opportunities in the emerging market space. There's really not much yield to be had in the fixed income world, but there are in quasi-sovs. In Brazil, for example, even in Mexico, you can find some attractively priced fixed income instruments. You can also look at equities, such as in China. We still see some upside in the A shares. So within this space right now, I think you can put on some risk assets or put some money to work in those risk assets while protecting your portfolio with the accumulation of alternatives, commodities, gold, real estate, kind of broadening yourself out for what could potentially be a rocky, tumultuous road over the next year and a half.
Catherine Rooney-Vera, always love having you. Thank you. Head of Global Macro and Chief Investment Strategist for Baltic Capital Markets. Stay well. Meanwhile, coming up, we're keeping a close eye on the markets as we push towards that closing bell. Shi Qiao is going to be with us. Financial advisor at UBS Global Wealth Management. Plus, Bristol Myers Squibb showcases its pipeline of new drugs as an investor event in New York. We're going to be talking with Dr. Giovanni Frollo, the company's chairman and CEO. And shares of Qualcomm hitting a record as the company announces new targets at an investor event. We're all over these investor events today. We're going to be talking with Cristiano Amon, Qualcomm's president and CEO. All that and so much more coming up. This is Bloomberg.
Think competition is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever, but nevertheless, talk to me about what you think the competitive landscape is going to look like here.
We've seen a bit of departures in this market, and this market has 3 very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the U.S., New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one directional traffic from the US to the UK, and now it's open, of course, to UK nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
For us, it's a question of how do we, as rapidly as possible, transition ourselves away from a fossil fuel-based economy. And that, of course, has a huge focus on the transportation products, but it also includes energy products.
This is the countdown to the close. 46 minutes left to go in the trading day. You're looking at an S&P 500 back above 4,700. Of course, it breached that level to the upside about a week ago and got tamped down pretty quickly here, holding that line here as we get closer to the closing bell, up about 0.5%. A lot of this because of some of the big cap tech stocks rallying hard here on the day, including Tesla. Your 10-year yield still camped out right around 163. Those yields going higher here on the day. And you're seeing further strength here in the Bloomberg Dollar Spot Index. We've seen this now for about 3 weeks straight. This coming at the expense of the krona, the Great British Pound, and of course the euro. Flip up the board. A lot of people still talking about what's going on in the EV space. Rivian seems unstoppable, at least for the moment here. Now at 168, up 13% here on the day. You're talking about almost double right now, or more than double, I should say, its IPO price of $78 and a 50+% more than what it opened at here when it had its debut trading. Lucid Group higher here on the well as well. It came out with earnings. There really were no earnings. There really was no revenue here, but it had $5 billion on the balance sheet. It had about $1.3 billion in its order backlog here. So a lot of people bullish on this stock. And now you're looking at a valuation here on Lucid that is now approaching, I guess, ludicrous mode, if you will, here. Right now, $90 billion on Lucid here. Again, these are stocks right now that basically have no real revenue, no real deliveries, yet they're valued more than most of the car companies out there. Then you take a look at American Airlines and Carnival Corp. A lot of the travel stocks actually under pressure today, including some of the sort of reopening trades like Live Nation. No real news on that, but it does seem to be concerned here about some of the spikes in COVID cases that we're seeing not only around the country, but of course around the globe. Time now for our Options Insight segment with Abigail Doolittle. We talk to her, of course, every day around this time. And Abigail, I know you've been taking a look at what's been going on with two of the biggest stocks of the day, which are Home Depot and Walmart.
Indeed. Well, Home Depot in particular, we're really taking a look at. Although it's fascinating with Walmart that Home Depot now has a bigger market cap than Walmart, even though Walmart does almost $600 billion in revenue and Home Depot closer to 150. But it has everything to do with price to perfection and that growth. But let's talk about the options underlying that space. And to do this, let's bring in Christian Fromhertz, CEO of Tribeca Trade Group. Christian, great to have you with us as always. And the interesting thing about this space, super hot on the surface in terms of Home Depot being up in a big way. I think it's best day since April of 2020. Walmart down the most since earlier this year. Yet beneath the surface, options-wise, not much happening.
Yeah, I mean, it's great to be here, Abigail. And in the option space, we're definitely seeing some interest here and there, but it's just, the overall sector move as well as the rotation that we're seeing on a day-to-day basis has been really awesome, I would say. The home builders have been breaking out. They're now moving to new highs, but we're also seeing that in groups like the materials and the industrial. So it's been a really good participation. While the option flow in some of these earnings names hasn't been that great going into the quarter, but we are seeing that strength post earnings, and then we are seeing a pickup in option activity after some of these names do report.
And it's pretty incredible to see that outperformance for the home building ETF, which of course includes some of those stocks such as Home Depot and Lowe's. As for areas where you are seeing some options activity, I know you talk about the fast money names. Romain was talking about a couple of them. What are you seeing there? Mini rotations as well?
Yeah, same thing. I mean, obviously the metaverse names are very active. The Roblox after earnings, the Unity software, which had a secondary yesterday. I mean, we're just continuing to see any dips in those areas being bought. And then you're seeing the semiconductors. Qualcomm is a big day, is having a huge day. And we saw option activity accumulating into that name pre. And also today, just a lot of rolling out of exposures. And you know, also in names like AMD, which just continuously sees option activity as well on the call side.
Yeah, certainly one of those hot momentum names. And then finally, a beaten down area, but one where there's a ton of options activity, at least based on what you're seeing, the China internet names, and a few of those, including Alibaba and Baidu and JD.com, reporting this week.
Yeah, all those names step up to the plate in terms of their earnings cycle. So, yeah, we're starting to see some speculation in things like the Chinese Internet ETF, which is KWeb, because all those names report this week and next week. And, you know, options are a great vehicle for speculation, obviously. And what we're seeing is the December 3rd options seeing a lot of activity, both the 56 strike as well as the 61 strike. And I think that's a great place to speculate. I like just, you know, paying about 80 cents for the 55 strike December 3rd options. You're not spending a lot of money, but if these things really start to catch and we see a move above 53 in the ETF, I think there could be something there in terms of a nice move higher.
Great color on what you're seeing for options right across many, many different types of sectors, including that China internet area. Christian Fromhertz of Tribeca Trade Group, thanks so much for joining us today for Options Insight. And from New York, this is Bloomberg.
Are talking about Bloomberg surveillance.
There's some guy out on Twitter who says I look like I'm on.
I noticed that.
Do you think I need a lift? Is it time
that I say about me? What did that particular gentleman say about? Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I have no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Will we get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point, when the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
All eyes, of course, have been on Biden and President Xi Jinping of China. They had their first, we're calling it face-to-face, but it was over a video conference. We'll make that clear. Of course, there weren't any major breakthroughs between the two countries, but we did get some highlights from the meeting. Take a listen.
It seems to me we need to establish some common sense guardrails to be clear and honest where we disagree and work together where interests intersect, especially on vital global issues like climate change. None of this is a favor to either of our countries, what we do for one another, but it's just responsible world leadership, and you're a major world leader.
For more, let's bring in our Bloomberg Chief Washington correspondent, Anne-Marie Hordern. And the bar maybe was set pretty low because we weren't expecting any major breakthroughs, but overall, can we say that it was a success?
overall, the White House and looking at all the Chinese readouts as well, it does seem to be a success in terms of really just opening those lines of communication. There's been a number of hot, tense issues between Beijing and Washington. Trade tariffs, human rights, what's going on with Taiwan. All of these things have been really coming to a bit of a point for both these leaders, and they were able to have a frank conversation. The president was also just speaking about his conversation in New Hampshire with Xi Jinping as he's talking about Build Back Better, his agenda, and he said they spoke for about 3.5 hours. So they did get to go through a wide variety of topics, and Xi Jinping right now, Taylor, has an immense amount of power, and it's very centralized, especially coming off of last week's key Communist Party meeting. Next year, he's going to get likely that third term. Potentially, this is paving the path for Xi Jinping to rule for life. So leader-to-leader engagement is incredibly important if they want to set up those guardrails and avoid those potentially what they wouldn't want to happen but could potentially happen is any sort of conflict, especially militarily.
Absolutely. I mean, talk to us about where still tensions are high, where perhaps, trade tensions in particular. Is there any alleviation there? Because at the moment, there's so much refocus of, infrastructure spend here in the United States to make sure that we're less dependent on China.
So there was one thing that came out of the meeting, which is something easier for American executives to get visas going into China. Potentially that opens up a little bit of communication within the business communities, and certainly American corporations highlighted that as something they were happy to see. When it comes to tariffs, we do know that China obviously wants the tariffs taken off, and potentially now with inflation spiking and that being the main driver and topic of conversation here at the White House, and for the Democratic Party to have to explain to constituents, this could be a time where there could potentially be tariff relief. You also have Trade Representative Catherine Tai with Gina Raimondo, the Commerce Secretary, right now traveling in Asia. And in 2018, when Trump and Xi met in Argentina at the G20, there was a 90-day truce after that. Now, that's not happening right now, but potentially this lowered the temperature, and there could be more dialogue between Xi Jinping's team and the president's team.
Always so smart on the ground for us, Bloomberg Chief Washington Correspondent Anne-Marie Hodder, and just taking us through what happened between U.S.-China relations. Now, of course, if you're a U.S. investor in some Chinese stocks, it's going to be an interesting few days for you because retail sales, of course, there was growth there in China, but been struggling to pick up significantly after hitting its lowest rate in a year in August. Now, what we're seeing is some relief in some of the economic data coming out of China this week, but the retail sales still looking a bit ugly, and it's going to be really important what we get out of the likes of the e-commerce giants. I'm thinking Alibaba reports a little bit later this week. I mean, how much has the cheapness in the stock managed to start to reward you for some of the regulatory risks that you're currently facing?
Yeah, and I like this chart because you talk about the erosion of inflation. Well, this is big because you talk about 4.9%, and everyone says, "Oh, retail sales are great." You strip out you factor in inflation, and it was only really up 1.9% here. We talk about inflation. This is a global phenomenon right now. This isn't just a Fed's problem.
Yeah, total global story. And I think, Caroline, you hit it correctly when you're talking about some of the regulatory risk as well. We've spoken with a lot of analysts. I think it was Catherine Rooney-Vera at the top of the 3 o'clock, also hinting that if you want to invest in China, you just have to be careful. You have to play that long-term game because you just don't know in the short term what the president will do when he decides to change the rules, and you don't have a say.
Yeah, what is it? More than half of the Nasdaq Golden Dragon Index currently slated to have results sometime this week. Also, we're talking so much to do with US-China towards global growth, global inflation, and our 4th annual Bloomberg New Economy Forum, right?
Yeah, it's out there in Singapore. That kicks off basically tonight, U.S. time, Singapore time, November 17th. That's basically just in a few hours.
Face-to-face discussions, some of them virtual, some of them in person. Finance, trade, climate, you name it, we're on it. This is Bloomberg.
than 5,500 forecourts, which is roughly 65% of all service stations in the UK. Of the ones that we were able to survey yesterday, roughly 1,500, 27% said they didn't have any fuel, 21% said that they had one fuel type or another, so that's either petrol or diesel, and 52% said that they were fully stocked. Northern Ireland, Wales, Scotland seem to be okay, but we still are seeing, like your reporters are seeing, some stock outs at sites around London and the South East, I'm afraid.
When do you feel confident that this will 100% be in the rearview mirror?
Well, what we're hoping is those people that got fuel over the last few days obviously don't need it again for another few days, and that will give us a chance to actually start to restock the network. So we're trying to get it back to a reasonable level today and tomorrow, and then over the coming weeks, because it will take a number of weeks, to get it back to the sort of more normal running levels.
lagging profitability that the European banks still undoubtedly have is structural weaknesses, which are linked to cost efficiency, to focus on business model, to investments in digitalization.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising. All right, an announcement about who will be in the Fed chair's seat next year. That announcement could come in about 4 days. This is according to President Joe Biden, who was asked about the potential to renominate Jerome Powell or go in a different direction. And he said that a decision on his nominee for the new Federal Reserve chair or the old Federal Reserve chair will come in a quote about 4 days.
Post-market close on Friday is going to be wild. Meanwhile, First Word News, we have it with Mark Crumpton.
Caroline, thank you very much. Vermont Independent Senator Bernie Sanders says he's working on a proposal to set an income threshold for an unlimited state and local tax deduction while letting high earners continue to deduct $10,000 from their federal taxes as they can under current law. Senator Sanders says the income level for the SALT cap in his plan is still being negotiated. He has previously floated about $400,000 in annual income as the threshold for unlimited SALT write-offs. In the UK, police are learning more about a suspected bomber who died when his homemade device exploded in a taxi outside a Liverpool hospital over the weekend. Officials say the 32-year-old was an asylum seeker from the Middle East who had converted from Islam to Christianity. Police are still trying to determine his motive and whether anyone else was involved. 4 men who had been detained were released. Britain's official threat level was raised following that blast. Violence broke out at the Poland-Belarus border today. Poland used water cannon and tear gas to stop Belarus-backed migrants from crossing the European Union's eastern frontier, a day after the bloc approved new tools to punish those escalating the crisis. Belarus is under the threat of new sanctions and is facing accusations of mounting a hybrid attack on the EU by pushing travelers to the border. Japan, which started administering COVID vaccinations months after the United States, now has the highest inoculation rate among the group of 7, and it accomplished that without mandates of any kind. Japan has fully inoculated 75.5% of its population of 126 million people, and that's according to Our World in Data, an online scientific publication that uses population statistics from the United Nations. conditions. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
The most crucial moments in the trading day. This is Bloomberg Markets, The Close, with Caroline Hyde, Romaine Bostick, and Taylor Briggs.
Counting down to the close, 26 minutes to go until this market.
Oh, just like that. Lights come on. Look at that. Hey, you gotta wait.
Anticipation.
The anticipation. You can feel it. I hope they're not. I hope no one's taping this.
You can feel it, Romaine. Take a look at where we are on some of the major averages. Like Romaine said, you're up about 0.6%. But underneath the surface level, there are some pretty big gainers underneath here. Some of this feels risk on. It's discretionary. It's energy. It's industrials. It's financials. Technology, though, also up, helping lead up 1.2%.
Yeah, this is a snapshot of what's going on. I want to look ahead here to maybe what you should keep an eye on. Tomorrow, a lot of earnings. Target and TJX in the morning. Keep an eye on those names, particularly coming on the heels of the results that we got out of Walmart. NVIDIA also going to report tomorrow afternoon here. They've been doing quite well. And keep an eye on Qualcomm. Qualcomm shares right now at a record high, up 8%. They're having their investor day now. We're actually going to hear from the CEO a little bit later in the afternoon about what's going on and what they had to say.
Yeah, they want to stay tuned for 4:30 p.m. when the CEO of Qualcomm joins us. Meanwhile, talking about inflation hedges at the moment, because gold has been a pretty good one. We've seen an interesting take. Gold perhaps erasing some of its gains today as we get some hawkish sentiment coming from some members of the Federal Reserve. Of course, that all-important headline saying that in 4 days' time, is that after the bell on Friday, we'll get some news on the Fed chair. We are, though, seeing yet more and more move from hedge funds in particular, trying to ensure that they're covered for this inflationary pressure, the price rising. We're seeing money move into gold at the fastest pace that we've seen all the way back to at the end of last year, in fact. So clearly a move towards gold as the hedge. Taylor, what about the all-important, digital gold?
I know you
Did Caroline just do a gold chart?
Yeah,
Wow.
but she's trying to. You're right, Caroline, because there's been a lot of talk that crypto would be the new inflationary hedge and gold would be out. Maybe not so much. Let's see if Katie Greifeld can answer that question in our ETF IQ segment. And we'll pivot as well, because this is a good story. The third Bitcoin futures ETF has just entered the market, but it is all as Bitcoin drops the most since September. It is a broad retreat from some of the latest record highs that we've seen. Katie Greifeld, as we mentioned here, joining us with more. Let's first talk about the inflation story, if we can. I thought it was a great inflationary hedge.
Yeah, a lot of people did as well last week. Again, it was an inflation hedge for about 4 hours. Not so much today, down 6.7%, turning into the worst day since September. But it looks like we just broke below $60,000 a coin. Just for some context, if we were having this segment a month ago, a lot of people would be thrilled to hear we were at $60,000. So still come a long way. It looks like some of the euphoria is cooling for today, but we know how volatile this asset class is. So let's check in tomorrow.
Yeah, I mean, we're below 60,000, but as you said, I mean, you go back to where we were when we were down at 35 here. A Bitcoin ETF, as Taylor alluded to, launched today, futures ETF, is not going too well.
It's a tough day to debut a new product tracking Bitcoin. So this one is from Van Eck. We had been expecting this in October, but we know that there had been a delay in some of these products after we saw the first one from ProShares attract such incredible demand. What's a little bit different about this one is that it's cheaper than the two that are on the market right now. It's 65 basis points versus 95 basis points for ProShares and Valkyrie. So that could help differentiate itself. But overall, I mean, if you look at the two Bitcoin ETFs that existed prior to today, it's pretty clear that just the frenzy we saw last month has cooled somewhat.
Yeah, frenzy is cooled as we see the price roll over slightly. Talk to us about the headwinds and the tailwinds for Bitcoin at the moment, because there are a few reasons as to why it's under pressure today and some reasons why you might remain bullish still.
Absolutely. I mean, if you look at today, the beauty about crypto is you never really know what's driving it. You could point to a few fundamentals today. We know that the infrastructure bill was signed into law yesterday, and so that matters because it contains new tax reporting requirements for very broadly defined crypto crypto brokers. And if you think back to September, this was the main issue that was being talked about. So that means more accountability, more taxes, more tracking, all things that are unpopular when it comes to the crypto community at large. I mean, you can also point to technicals too. By any measure, if you look at Ether, really that rally was looking a little bit overstretched, but nothing fundamentally has changed between today and yesterday. I mean, especially if you focus on Ether, it's still an incredibly popular blockchain. There's a lot of innovation happening there, and that, you know, there's still people pushing the Bitcoin as an inflation hedge argument, and inflation is clearly the hottest topic right now.
Well, I mean, Caroline just showed a gold chart, so you know things are crazy. By the way, you said the Bitcoin,
old school.
You never know what's going to happen. That's the beauty of it. Some would call that a flaw.
Some would call that a flaw. I mean, if you are, you know, a corporate treasurer trying to shift your balance sheet from cash into Bitcoin, I could definitely see that as a flaw. If you're,
you probably shouldn't do that if you're a
You
corporate
call that good old fundamental analysis, Romaine.
Well, didn't Ned Siegel of Twitter just say that they ain't going there?
Yeah, which was interesting because we know Jack Dorsey.
Jack Dorsey said we're
really,
going there.
Yeah, Jack Dorsey did say that.
And
but
he owns the company
seriously,
still,
if you
right?
are a trader and you've been starved of volatility, crypto might be the asset for you.
Yeah, I would love to be a fly on the wall in that conversation between Ned Davis and
Ned Siegel.
Ned Siegel, excuse me, and Jack Dorsey, right? And Ned Davis too.
Yeah, exactly. That would just make it fruity.
All right. Our thanks there to our chief crypto correspondent, Katie Greifeld. There. Hey, that's it. We'll be back in a moment. Don't go anywhere. You're watching Bloomberg.
We landed with 40% remaining. Years ago, Ewan Dixon was the first guy to do it. It's taken a century for us to change our propulsion system away from liquid fuels.
There are dozens of international companies in that airframe size who've realised the opportunity, are in a race to get those commercial aircraft out there at that scale. It's an area that can be served by hydrogen, which we're well placed with, through fuel cells.
80 minutes to go until this market closes. S&P 500 having a pretty strong day, up 0.8%. Thank you. Those retail sales number that come in stronger than anticipated. Actually managing to look through some of those inflationary worries, those headwinds. The Russell 2000, though, I mean, flat, the laggard on the day. Big tech wins out. We're seeing natural gas, extraordinary moves that you saw in Europe, up more than 10%. Of course, that, as we see, the Nord Stream 2 gas pipeline perhaps coming on later than anticipated, not alleviating that winter rush. Natural gas up 2.6% is where it settled here in the US. And crypto, poor day across the board. We were looking at Bitcoin, Ether off by more than 8% as well. Let's talk about cross assets. Let's talk about market sentiment with Shi Chao, financial advisor at UBS Global Wealth Management. She will be with us as we move towards this market close. And once again, heading towards record highs. Shi, what do you make of the market sentiment right here?
Well, there's a lot of anxiety in the markets over inflation and some of the lingering COVID worries. But the Fed has remained accommodative, and that's what we have been expecting. So going into the finishing of this year, we feel like the equity market should remain strong, and we still, like to see our investors stay invested. And of course, we expect more volatility ahead with rising rates. But as of currently, the market should stay pretty well going into the year end.
But you understand, Shi, you understand investor behavior, and you talk about a period of volatility. We've heard from a lot of folks that this is what we should expect. I assume a lot of people are going to start to see that volatility in real time. They're going to pick up the phone, they're going to call you, they're going to call some of their other advisors and say, what's going on? Either get me out of this or put me in something else. How do you sort of tamp down, I guess, some of those anxieties, that nature, that human nature out there, that when you see volatility, you want to run for the hills?
Well, we definitely want to keep our clients focused on their long-term investment plan and the longer-term horizon for their money, and especially going into year-end. This has been a good year, so it's most investors, we just don't see a lot of selling out there towards year-end, especially with how expensive a lot of the holdings are right now, and a lot of capital gains, and a lot of people are just not interested in taking in those gains. So at this point, even with tax consideration, we still see it's been easier to talk to clients to just maintain their long-term investment plan.
You mentioned those tax implications. How much are higher future taxes more and more a part of the conversation you're having with your clients?
Oh yeah, that's a great concern, and that's just been the topic of every day is talking about taxes, and with the expectation of higher taxes, it's been a lot of planning for clients to incorporate how to deal with higher taxes, and a lot of that right now is I think clients are because of those concerns are focused on less trading and long-term returns.
All right, Shi, sit tight for 1 second. We need to take a break. We're in conversation right now with Shi Chao, financial advisor at UBS Global Wealth Management. She's sticking with us as we count you down to the closing bells here. Just about 15 minutes to go. You're looking at an S&P 500 back above 4,700, up 0.5%.
Still volume's down, though, down almost 8% versus the last 20 days. So there's commitment to the buying, but not that much.
Stable yield environment, as you highlighted some of the strong economic data that we got this morning, though if you back out inflation, it wasn't enough to sort of move the needle in any which direction. And so you're very calm, just 202 on the 30-year.
Look at the dollar as well, though.
Yeah, dollar really having a big tear here at the expense of the great British pound and the euro and the krona and the krone and everything else.
was just finishing what you were saying, Tom. November 3rd is when the decision is. Just in case people got confused, I will. Just one more story, Tom.
Yeah, thank God for that.
We're at 137 right now.
Wrap it
into
up.
weakness. Is this where they play the music and the Academy Awards? Is this it? Do I thank my mum again? Are you in charge of this?
Is she the only one?
Kill the music. You know who's in charge here.
目前眼前状对我们军方来讲的话，我只跟委员报告，是我从军以来40多年以来看到真的是最严峻的时候。要翻台的话，他目前有这能力的，都有的，啊，但要看怎么一个结局。所以我们不做任何挑衅啊，但如果把他激怒了，就跟我们人一样，你把我激怒了，我手上能力我也会发挥出来。所以2025是我们研判要全面，啊，我们这样研判的。
China has, I've spoken with Xi about Taiwan. We agree we will abide by the Taiwan agreement. That's where we are. And we made it clear that I don't think he should be doing anything other than abiding by the agreement.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
It is really still day one for AWS and for our customers. It is still so early in this business.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Countdown to the Close. I'm Caroline Hyde.
I'm Taylor Riggs.
And I'm Romaine Bostick.
And the drip, drip, drip of news on the Federal Reserve chair pick, and Biden has not made a decision yet, according to a person. This is on Bloomberg reporting right now. Meanwhile, I mean, today was a day where inflation was front and center, but we managed to look through it when it came to consumers still willing to spend. The retail sales number come in strong, and that's why I'm showing you the S&P 500 in the yellow. The outperformer, the best performing industry group, has been consumer discretionary today. Etsy and the likes really on a tear on after that better than expected data.
Yeah, you're seeing that show up. A lot of the retailers here. We came into today, of course, expecting pretty decent retail sales numbers from the government, as well as, of course, as what we talked about with regards to the earnings out of Walmart and Home Depot. You're going to get some more of that, of course, coming up later in this week. Right now, of course, at the bottom of your screen, you're looking at the S&P Super Composite Retailing Index. Pretty much everything in there is on fire today. Bed Bath & Beyond, Macy's, each up 3, 4, 5% here. You talk about the KBW Bank Index. That's been weaker on the day. You're seeing a nice bid, though, come in for some of the chip stocks here. But keep an eye on the airlines. In fact, we haven't really talked about this, but pretty much everything in the travel space right now is lower here. This seems to be tied to some of the concerns about some of the uptick that we've seen in a certain amount of COVID cases.
Let's do all of this and more with Shi Chao, financial advisor at UBS Global Wealth Management. You mentioned some of the high valuations going into year end, preventing some people from selling because you don't want to then have to be responsible for capital gains. Where then within these equity markets are you still able to find valuations that look attractive?
Well, tech still has been a big driver of the growth this year. And of course, consumer discretionary is doing great going into the holidays, and we feel that's going to stay strong. But I think in the longer term, and when there are opportunities, when there are, maybe days where certain sectors are pulling back, it is important for investors to take those opportunities and look into diversifying out of some maybe the bigger tech holdings into financials, which is going to do very well with rising rates. Energy, there's still a strong demand over supply with energy, and that's just something that most investors are underweight in. And then also consumer discretionary, of course. So, but it just takes time, and it takes opportunity to find those opportunities where you can find a day or a certain period of time to rebalance into these sectors.
Talking about how financials could benefit with rising rates, talking about rates, the outlook, I mean, are you taking any client questions about the Fed chair at all? I mean, we're all on the edge of our seats about an announcement coming in the next 4 days, but is it something that the market that you really care about?
There's certainly been a lot of anxiety over inflation, over rates, but as we have, kept our expectation is that it's going to be gradual. We don't feel like the Fed wants to, overreact. We want to focus on the longer term. Inflation is, a big worry right now, but, we feel like that's going to eventually fade off, or at least ease off over the course of next year.
All right, and we should just point out here, of course, on that reporting here, this is according to a person familiar with the situation, that a decision has not been made. They do talk about that the White House is seeking input from senators to ensure that either Powell or Brainerd would get the votes needed for confirmation. Again, this according to a person familiar with the process. A lot of us, of course, obviously keeping an eye on where monetary policy goes, whether it's at the helm of Powell or whether Brainerd is at the helm here. When you think about just the overall likelihood that we do see some sort of normalization in monetary policy over the next couple of years here, does it change the general strategy that you have for clients in trying to position their portfolios for whatever is next to come?
That's a great question. I think we are expecting, changes eventually. We're expecting the Fed timing. We're expecting the rate rise. So if there is any bigger changes or any surprises, I think we still will be staying with the long-term strategy we have set for our clients. We still want to focus on, the longer pockets of the economy where we see growth, where we have some of our, investments positioned, and, all of this eventually will need to adjust, and it's perfectly normal to adjust as the economy begins to normalize.
All right, we're in conversation right now with Shi Chow, UBS Global Wealth Management Financial Advisor. She's sticking with us as we count you down to the closing bells. Just about 5 minutes to go until those bells. We're going to get back to Shi in a moment, where we want to jump over to Taylor, who's at the board.
Romaine, there is a supply chain and inflation theme throughout our show. There is also a fitness theme throughout our show. We continue that with shares of On Holdings. Take a look at this. Up on the day, you're up now almost 26%. This is the athletic shoemaker, of course, that we know, posting a surprise third quarter profit. The company's saying they're pretty much seeing demand across the board, not only globally, geographically, but also wholesale and direct to consumer across all of their products. So analysts and investors certainly liking shares of On Holdings today. Change up the board, and I'd love to bring you back into this conversation. We've been talking a lot about equities and the big outperformer in these sort of inflationary environments. And I am wondering if Bitcoin, too, is also one of those sort of inflationary hedges, though we don't have a lot of time to test it. But it is testing the 50-day moving average as we crumble a little bit today. How are you thinking about some of these sort of extra volatile cryptocurrencies in a portfolio?
Well, crypto has never been a big thing for us, just because we feel like it's still very highly speculative. We're in wealth management. Our goal is to preserve our clients' overall assets, and we want to, definitely stay with something a lot more stable, just because the speculative nature of crypto. But what's interesting is that, gold has also been kind of out of favor as well, because a lot of people, would would expect gold would do better in inflationary environments or as a hedge. But, a lot of investors are now going to crypto, and we see less of that attractiveness with gold. But, again, it's just not, crypto is just not something we are, we are focusing a lot on at this point.
Yeah, gold had a little bit of an improvement since November the 3rd, but it's still at 1,851. We want to thank you so much. Xi Chao, financial advisor at UBS Global Wealth Management. Always great to get her perspective on the markets as we head towards what is a close where we're pretty close to those record highs once again, Romain.
Yeah, getting back in, and you talk about the last few down days that we had. I mean, those were pretty much just blips. We still haven't seen that massive drawdown that a lot of people said the market needs. This is a reset, maybe, and maybe the reset is higher, Taylor.
Hard to argue with that. Every analyst that we've spoken to has talked not a lot about sort of that Santa Claus rally as we go into the end of the year, though
Can we talk Christmas again?
How many days? Where's our calendar?
I think it's 40.
Though there are still some analysts out there, I believe it's Morgan Stanley, right, still looking for a lower end of 2022 downward from where we are today. All
right, well, 39 days until Christmas, Caroline. 4 days maybe to a Fed announcement. Who knows? Who's counting anyway? And of course, we're about just in 3 minutes away here from the closing bells, as we do every day around this time. We bring you full market coverage right here on Bloomberg Television, radio, and YouTube as we take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romain Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast, joined right now by Carol Master and Tim Stenovic, bringing together our Bloomberg Television, radio, and YouTube audiences here. 4702 right now, Carol, on the S&P 500.
Yeah, absolutely. And what's interesting, did you check out all the headlines that are out there? You've got Goldman Sachs lifting their outlook for U.S. stocks. JP Morgan strategists say they remain bullish on equities. And global fund managers in a B of A survey ending the year with the biggest overweight on U.S. stocks since August of 2014 makes me a little nervous that everybody's so optimistic.
Did you also see in that survey, Carol, sort of what the outlook was for 2022? I mean, gains, but much less than what we had over the last couple of years.
But still optimistic despite those significant gains.
Well, unless you're Mike Wilson over at Morgan Stanley.
Well, there's a bull, there's always a bear.
Look, gains in the equity market today, but we're seeing a broad-based sell-off in crypto. We are seeing Bitcoin below 60,000, down about 6.6% right now. Dash, EOS, Ethereum Classic, Litecoin, the list goes on. Lots of red across the screen.
Is this based on fundamentals?
I'm so glad you asked. We don't know exactly what it's based on. It's a question I posed to Eddie Vanderwalt earlier today on Quick Take Stock, and he said that's the thing about crypto. Sometimes you do know, sometimes you don't. Some people are saying it's because of what's in the infrastructure bill.
Yeah, I was told by Katie Greifeld that's the beauty of it.
But that was telegraphed, right? We knew that was coming.
Mt. Gox is another key risk in the market at the moment.
What's happening
Some
with
settlement coming in there eventually. But, I mean, gold also rolling over a little bit today. So for some reason, Taylor, inflation is not something we're worried about on this day when we see retail sales as long as they were.
Yeah, this was really interesting story. Romain's worried about inflation. The price of his suits keep going up as we wait for some more of the retailers to come out tomorrow.
My tailor's always been expensive.
But if you back out inflation, those retail sales actually didn't look as good as maybe we thought.
Yeah, 163 right now on your 10-year yield, Taylor. You didn't mention that.
I was saving it for later.
All right. Well, we're not going to save this for later. The Dow Jones Industrial Average closing higher here on the day by about, let's call it 0.1% here, up about 57 points. S&P 500 up 0.4%, back above 4,700, 4,701 to be precise. The NASDAQ Composite also higher here on the day by about 0.8% here, right now around 15,973. And the quick check here on the Russell 2000, the relative underperformer on the day, up about 0.2% here, 2405 right now on the Russell. That's higher by about 4 points.
Romain, I just want to know, do you have like a closet like dry cleaners? It's like an electronic thing and the suits just move around?
Well, thank you. Now I know what I should get for Christmas.
Well, speaking of Christmas and holiday sales, get your buying in. We certainly saw that in the retail sales report today out from the government. But as a result, on Wall Street, we saw the S&P Super Composite Retailing Index up about 1.3%. So that whole sector being lifted up today, guys.
Yeah, let's take a look at sectors. Carol, since you mentioned those for the radio audiences, we do the sector winners, the sector losers, retailers. And the winners, I'm going to just do a quick push forward to the Qualcomm CEO that, Caroline, I know that we've been really excited about. When we think about the chips, some of the semiconductor makers are up 1.5%. Auto components up almost 3%. Those are some of the real winners that we certainly see on a day like today. Quickly down at the bottom on days when Walmart actually looked pretty good, but those shares are off just a little bit. So some of the food and the staples and the food and beverage, those are some of the losers, off about 0.7%, with yields rising. Real estate, the worst performer, off about 0.7%.
All right, let's get to some of the gainers in today's session. Peloton, man, what a standout. Pretty much finishing at its highs of the session, up almost 16% today, 54.85. It was all about selling $1 billion worth of stock, which I could not quite get my head around because I'm thinking share dilution, right? But nonetheless, investors seem to like it.
It's called being oversubscribed.
I guess so, right? I mean, if you look at just the reaction on Wall Street specifically, but the stock, keep in mind, prior to this was down about 45% since it slashed its annual revenue forecast. We saw that back on November 4th. So
yeah, did you take a look at a long-term chart of that?
Not pretty, right?
Yeah, no, it's not pretty.
No, exactly. But nonetheless, investors buying today. All right, let's talk about Taylor talking about some of the group winners. Home Depot among the retail group up about 5.7% here, near its highs. One of the world's biggest retailers, revenue and market cap, now bigger market cap than Walmart, which is a pretty interesting stat today. And they just kind of blew it out of the water when it came to their latest quarterly report. And I do want to mention, I think, Taylor, you mentioned chips a little bit. You guys were talking about it. Advanced Micro Devices up 4% in today's session, top of the NASDAQ 100. Semiconductor analysts positive on AMD, NVIDIA, some other names after top 500's biannual supercomputer list showed some share gains for the companies. I had to do some homework to figure out the significance of that list.
We get NVIDIA earnings tomorrow, by the way.
Exactly.
I think AMD at a record high.
Yeah.
Well, speaking of earnings, Walmart had third quarter results exceeded expectations, and Walmart lifted its outlook, but those margins taking a hit because of higher costs. The company finishing the day down by more than 2.5%, declining the most since May. Gross margin falling slightly, dragged down in part by those higher supply chain expenses. I also want to talk
about Activision, man.
Yeah, let's talk about that. Yeah. Look at that, finishing the day down by more than 6%. It did drop sharply earlier in the day after the Wall Street Journal published a story that said Activision Blizzard CEO Bobby Kotick had been aware of sexual misconduct claims, and now employees of the company are saying that they will walk out and press for the CEO to step down, saying, quote, "We will not be silenced until Bobby Kotick has been replaced as CEO and can continue to hold our original demand for third-party review by an employee-chosen source." That's according to a tweet sent by the ABK Workers Alliance.
And we should just point out, too, that the Activision did put out a statement basically saying that it was inaccurate and misleading what the Wall Street Journal reported, and that they're actually standing behind Kotick at the moment.
Yeah, the company did say the report ignores important changes that are underway at the company, including a zero-tolerance policy for inappropriate conduct. Biogen finishing the day down by close to 3.8%. Shares falling after the company said its top scientific executive, they said this late yesterday, is resigning at the end of the year. It's Alfred Sandrock, head of R&D, retiring effective December 31st. This is somebody who was instrumental in the development of Aduhelm. That's the Alzheimer's treatment that was controversially approved by the FDA earlier this year. Caroline.
Tim, tell you what's also in the red. Basically every other currency in the G10 versus the US dollar. US dollar pushing on higher once again as we get that strong retail data, as we get some hawkish sentiment coming from members of the FOMC. We're all still on tenterhooks about who will be heading that FOMC come in the next 4 days. But I'm looking at the Swedish krona off by more than a percentage point. The Japanese yen down by 0.6% against the US dollar. But basically everything on the downside. Metals sold off. Maybe that's why the Aussie dollar is off by 0.7%. And let's check in on some of those metals. Steel down by more than a percentage point. Of course, as the dollar gets stronger, metals lose some of their luster. We're also digesting what that Xi-Biden meeting meant in terms of the outlook. Gas oil up 2.2%. It's interesting what happened in terms of natural gas. Extraordinary moves over in Europe. Once again, the Nord Stream 2 gas pipeline potentially being pushed back further, kicking that can down the road. What does that mean in terms of this winter period when we want to turn up our heating, with natural gas up more than 2.5% here in the US? It was up more than double figures over in Europe. And just to get your daily look at milk, once again, it's there to haunt me forever, down by 1.5% if you're looking at milk. Important if you're buying 12 gallons for your 9 kids. And lastly, I'm looking at sovereign bonds. Very mixed picture, Taylor, but you can tell us what's happening in the United States.
Was this the first milk update that we've gotten off that board?
Yeah, was that? That was wonderful, Caroline. There's no inflation. Milk's down. Love that. Let's take a look at where bond yields are, as Caroline sets me up pretty nicely here. We're moving up. You know, this is actually pretty calm relative to some of the recent swings that we've seen within the bond markets, but you're solidly yield higher across the curve, just 1, 2, 3 basis points, but really notable further sort of curve inversion if you're thinking about a 206 on the 20s to a 202 on the 30-year. And really, Carol, when we talk about these bond yields that have slowly been creeping up, it really leads us into conversations with the Federal Reserve and where we are in terms of some members saying it's time to be a little bit more hawkish, and other perma-doves saying, no, I don't think so. We'll just continue to repeat that it's transitory.
Rock'em sock'em robots. That's what's happening at the Fed. What's interesting is I think James Bullard might be buying some milk, and maybe that's why he's saying we need a more hawkish policy. Check out what he had to say.
The inflation rate is quite high. The core PCE inflation rate, the committee's favorite measure, is about 3.6%. That's the highest it's been in 30 years. So I think it behooves the committee to tack in a more hawkish direction. We could move faster. We kept optionality on this, that we could speed up the taper if it's appropriate.
All right. That, of course, is James Bullard, president of the St. Louis Fed, earlier with our surveillance team on Bloomberg TV and Bloomberg Radio. But, guys, depending on the Fed person who's making the argument, you got Neil Kashkari, who's much more dovish when it comes to Fed policy. And I feel like,
what did he say about Twitter? That we shouldn't be paying attention to hyperventilation on Twitter when it comes to inflation.
Yeah.
Are you hyperventilating about inflation on Twitter? Right?
No, I'm not. I don't hyperventilate about anything. I mean, even Richmond Fed President Barkin said something similar. But, I mean, to Bullard's point, and I mean, this is something that's really starting to be speculated a lot in this market, is that the Fed is behind the curve, and that at some point, when they do really try to sort of move forward with normalization, they're going to have to speed it up.
Right, but the concern is if they speed it up too quickly, or if this indeed is transitory and they raise rates too quickly or tighten in some way too quickly, then that could kill growth, and we could see, again, unemployment not continue to go down at the rate that it's been going down.
Do you think these questions are being asked of Powell and Brainerd in those interviews?
I do. Who do you think we're going to hear is actually going to be chosen as the new Fed chair in 4 days?
Lay your bets.
And what is 4 days? What does that mean, guys? Does that mean Saturday?
I bet it's just after the market close on Friday when everyone was anticipating going home.
It means just stand by.
So you do bring up a good point, Tim, and Carol, I'll toss back over to you, that the timing of all of this pushes you out to 2022, as Priya Misra says over at TD Securities. How do you get a rate hike when all of that slowing inflation and slowing growth is all going to hit potentially next year?
All I know is we could debate this forever in terms of Fed policy. What I care about is what the rest of the retailers have to say and whether I'm not going to get my toys and things under the Christmas tree. That's all I'm going to say.
You're already behind.
I am already behind.
Ordered it now.
Be a lot of gift cards coming out. All right, we got to do it. That's going to do it. Our market wrap on this Tuesday, Beyond the Bell, on Bloomberg Radio, Bloomberg TV, and YouTube. We'll catch you same time, same place tomorrow.
And Carol, maybe you'll be buying a Lowe's gift card. Of course, that's where their earnings coming out tomorrow. We've got so much more coverage coming up. We're going to be, of course, talking biopharma, these all-important investor days that are going on. The CEO of Bristol Myers Squibb is going to be discussing how the reaction to some of their pipeline when it comes to new drugs. Dr. Giovanni Caforio going to be sitting down with us. This is Bloomberg.
Is there at the moment amongst the asset managers that actually some of the ESG labeled products, then if you probe, are not green?
Well, look, there is some stress, and it's great that there's that scrutiny, and there's that skepticism or healthy skepticism about ESG labels or sustainable labels. And that, again, is one of the reasons we're having this ruthless, relentless focus on net zero, because in the end, look, we can't stabilize the climate unless we get to net zero. And it's a simple, these are hard numbers. Your emissions are either A or B, they're going up or down, and if they're going down, are they going down consistent with the science? We anchor it in the science, the same science the UN and others use for the 1.5 degree objectives.
Should this not be compulsory? Should we not have regulators coming in and saying, look, this is a new definition, you stick by it, and we're going to measure it?
So I think it's a great question. So let's look at what happened with TCFD, climate disclosure. 6 years ago, you and I were in Paris, we talked about this, we talked of other things. Now that's moving to become mandatory.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
No shortage of economic data this week. The U.S. Census Bureau releasing October numbers for housing starts and building permits tomorrow on Wednesday. This, of course, as real estate investors pour record capital, I should say, into the housing market. For more, let's bring in our Bloomberg real estate reporter, Patrick Clark. And Patrick, we got a glimpse of it today with Home Depot and perhaps maybe a further glimpse tomorrow with Lowe's of just how strong this housing market continues to be, the resiliency of it all. Do you expect that to also be reflected in the numbers tomorrow?
Sure. I mean, both from the perspective of owner-occupiers and regular home buyers, as well as investors. I guess it's a relatively old housing stock, and homes are hard to come by, and maybe the homes that are out there are homes that need to be fixed up.
Well, all right. Well, let's talk about, I guess, the supply, the pipeline there. We've heard from a lot of these home builders that, look, there's tons of demand. People want to buy their houses, but they can't really hire enough people or get enough of the materials to sort of complete some of these purchases. Is there a tamp down effect that will show up in the official numbers that we get tomorrow?
Yeah, I mean, I think it, generally speaking, the lack of supply is probably, if there was more supply, there'd be more homes being sold, and it's really stretching across, I've heard over the last, I guess over the year, just about everything from appliances to joists for the ceilings to, I've heard, landscaping material, dirt, basically, that you need to build a home in Florida, has been hard to come by, and all of that certainly is having an effect.
I'm interested in, we have had a lot of hand-wringing about certain pockets of the United States suddenly falling away, bubbles in the market, and how much is that being spoken to in the data right here, right now, or is that still very much forward-looking?
I guess interest, I mean, if you're talking about investor purchases of U.S. homes, I think there is there's some amount of froth. People are eager to buy these properties and probably bidding up to get them. Interest rates are also very low, and we're not building a lot of homes, so you may be paying more, but still feel like it's a reasonable investment.
Patrick Clark. Or is this smart when it comes to all things real estate? Bloomberg real estate reporter, as we were mentioning, sort of all eyes on some of those numbers tomorrow. And be sure to catch a conversation, in fact, with Jerry Howard, CEO of the National Association of Home Builders. It's on Wednesday at 2:30 p.m. Eastern. So we delve into that part of the data as well as some of the earnings coming out of Lowe's after we had Home Depot today. Time now for the First Word News, though. Here's Mark Crumpton.
Caroline, thank you very much. President Biden today traveled to New Hampshire to sell his newly signed $1 trillion infrastructure law. The president said this is the right time for this plan.
We're at an inflection point in American history. This law meets that point. For most of the 20th century, we led the world by a significant margin because we invested in ourselves.
The president walked across a dilapidated bridge in the town of Woodstock to deliver his remarks. He said the bridge, which he called unsafe, is one of dozens around the state that the new law would help repair or replace. Bloomberg has learned the Biden administration plans to buy enough of Pfizer's new COVID-19 pill to treat 10 million patients. The pill showed extraordinary results in a clinical trial, reducing hospitalization and death by 89% among high-risk patients. High-risk COVID patients. The company plans to submit data for the pill to the U.S. regulators by Thanksgiving. Citadel has promoted Pablo Salame to co-chief investment officer. The former Goldman Sachs executive will take over the new role on January 1st. He's replacing James Ye, who is leaving the company. Citadel says Salame will share the title with founder Ken Griffin. He'll help oversee Chicago-based Citadel's $43 billion in assets, a figure that surged from $27 billion in 2018. Fenway may be getting into the hockey business. Dow Jones reports that Fenway Sports Group, the holding company that owns the Boston Red Sox, is in advanced talks to buy the Pittsburgh Penguins hockey team. The team is currently owned by former NHL star and Penguins player Mario Lemieux and investor Ron Burkle. Fenway Sports, controlled by investor John Henry, also owns the English soccer team Liverpool Football Club and a piece of a NASCAR team. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Reducing global warming continues to be an uphill battle in the fight against climate change. 1.5 degrees Celsius. That's the temperature deemed the safe limit for global warming set by the Paris Agreement in 2015. To limit warming to 1.5 degrees Celsius, CO2 emissions would need to be reduced by 45% by 2030. 191 Paris Agreement signatories committed to setting national targets to reduce CO2. But current national targets project a 16% increase in greenhouse gas emissions by 2030, with global temperatures expected to rise to 2.7 degrees Celsius by the year 2100. Among the most vulnerable to global warming are many of the world's smallest and poorest countries.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Today it's a lot more about things like services. So people come because they want to find the local plumber, maybe a contractor, maybe it's a babysitter, and they tend to convert very fast. So we do well for advertisers, top of the funnel, brand, and then bottom of the funnel, direct response.
Bristol-Myers Squibb hosted an investor event today to showcase its pipeline of new drugs. This comes as the company's top seller, Revlimid, approaches some patent expiration and increased competition next year. For more on what's ahead, Bristol-Myers, we welcome the chairman and CEO, Dr. Giovanni Caforio. It is wonderful to have you in the studio with us, and I'm sure it felt pretty momentous to be in the same room as your investors once again and to be able to have this sort of discourse. And remind us, there's sort of unprecedented 9 new medicines that you're launching here. What was the reaction from the investor base?
Well, thanks for having me, first of all. It was great to be in the same room with investors and be able to discuss the progress we've made. We are launching 9 new medicines in a short period of time, which is really unprecedented for our company. The pipeline of Bristol-Myers Squibb has doubled, and we communicated the potential of those medicines. We see them at $10 to $13 billion in sales by 2025, with the potential to be over $25 billion in sales by 2029. So we're really confident that we have a number of growth opportunities and drivers to replace the products that are losing exclusivity and grow the company through the decade.
Part of the drivers, at least in the pharmaceutical space, that a lot of people look to are, of course, the success that has been seen so far with mRNA with regards to the development of the COVID vaccines. There are a lot of people that look at Bristol Myers and they want to know what's the plan, if at all, for mRNA in your pipeline.
Well, we have a very diversified pipeline across multiple platforms. The platforms we're investing in are really exciting. I'll give you two examples. One is protein homeostasis, completely different way of treating disease. We have 5 products in the clinics right now. And one of the most exciting areas is cellular therapy. And so one of our medicines, Breyanzi, we presented data actually where for some forms of lymphoma, it will change the standard of care, which had been established over 20 years ago. So these are just examples of the sort of diversification of our pipeline and the leadership we have in really exciting science areas.
That pipeline also important given some of the generics that are coming online, some increased competition. How are you looking at the threat of that, the deflationary forces of that, and I guess being able to navigate it?
Well, that's our business. We know that our role is to develop new medicines and renew our portfolio all the time. Our history as a company is one where multiple times in our past we've been really successful at renewing our portfolio. We know we have a number of losses of exclusivity coming, but the launch of new medicines, 9 new medicines in a short period of time, over 50 medicines in phase 1 and phase 2 early development. Again, we're really confident that the renewal of our portfolio is accelerating ahead of those losses of exclusivity, and we're very confident we'll continue to grow the company through that period.
You've grown the company organically, but also inorganically, making purchases, Celgene and the like. I'm interested as to how much M&A folds into that role of continuing to beef up the pipeline.
Well, we have tremendous financial flexibility, and so that enables us to look at innovation internally, of course, by funding research and development, but also externally with business development. That is one of our key pillars in terms of our strategy. And we look at 2 types of deals, in fact. Science-based early research collaborations are critical to our strategy. That's how we broaden our research platforms. We established over 85 collaborations in the last few years. But we also look at mid-size and small-size bolt-on acquisitions. We did that with MyoKardia, which brought to us a really exciting medicine, mavacamten, that we're getting ready to launch at the beginning of next year. That will continue to be an integral part of our strategy.
And how much assurance can you give investors with regards to the supply? I guess basically keeping that pipeline, not just with the development of the drugs, but once they're made, getting them out there. We've seen some issues with some of the CAR T drugs. A lot of investors want to make sure that whatever is new coming down the pipeline is actually going to reach the end consumer.
Yeah, I mean, that's clearly a priority for us because we want to make sure that patients have access to our medicines. I must say that throughout the pandemic, we've been very successful. Our business continuity management has enabled us to continue to supply medicines around the world to our patients. It's critically important, and we pay a lot of attention to that.
Were there any issues with some of the input costs or input availability of some of the inputs that you needed for the manufacturer?
Well, of course, in our industry, a lot of manufacturing has been focused on vaccines, and there are some ingredients that are the same for other complex biologics like the ones that we manufacture. So I'm really proud of our teams because throughout the pandemic, they've been able to overcome those obstacles and not only continue to supply medicines to patients, but also keep sort of the R&D engine going, clinical trials continuing, because there are patients with cancer that are waiting for the next generation of therapies, and we definitely didn't want to slow down.
Romain talks a lot about the input costs on this show for the past few months, really been talking about the output costs, some of the inflationary pressures, passing those on to the consumers. Pre-COVID, there were a lot of discussions in the administration about drug pricing and trying to put pressure on healthcare companies and drug makers to make it more affordable, make it more accessible. Do you still see that as a real regulatory risk in a post-pandemic world?
Well, there clearly is discussion about healthcare reform in Washington right now, and there are elements that are concerning to us because, for example, the prospect that the government may set prices. We know in every country where that happens, innovation suffers. There are some of the reforms that are being discussed, like establishing, for example, a cap for out-of-pocket costs for seniors. The industry has been advocating for a long time. We're clearly very supportive because it's all about making our medicines affordable to every patient.
Can you tell us whether you indeed are approaching Irenia?
No, I won't comment on that.
One thing that you might comment on more specifically is we've had a lot of people worry about whether or not people have been able to get the treatment they needed during COVID. In particular, they talk about the secondary health crisis of people not having been able to treat the cancer that they had. Is that something you worry about? Do you feel that that's something that's being tackled?
We are concerned about that because when we look at the number of patients with cancer that go to healthcare centers in the U.S. today, it's still 5 to 10% below where it was before the pandemic. So I think it's absolutely critical that we manage the flow of patients back into the healthcare system because we are worried about the consequences of that.
All right, Doctor, really appreciate you taking time to be with us. Dr. Giovanni Caforio, of course, the chairman and CEO of Bristol Myers Squibb. All right, that does it for our coverage of Bloomberg Markets to Close, but you want to stick around here for what you missed. We got a big show coming up here. We just talked about, of course, Bristol Myers Squibb hosting their Investor Day. Qualcomm, Caroline, also hosting their Investor Day, and the CEO, he's going to be stopping by in just a minute.
Yeah, President and CEO Cristiano Amon is going to be joining us. I mean, what to talk of pipelines, what a pipeline in terms of like the overall addressable market that they've been talking about, the overall focus of basically getting these chips. It's all been about smartphones, but it's about 5G, it's about cars, they're signing a deal with BMW, it's about, well, the metaverse even.
The Internet of Things. We're all connected at home in every way, and I think we'll be discussing that a lot in terms of the diversification of a strategy, getting away from just a mobile strategy.
Yeah. And we got to talk, of course, about the manufacturing process, the outsourcing that they've been dependent on, and the potential onshoring that a lot of people are looking to Qualcomm and others. A lot of political pressure on this issue right now.
Yeah, a company that's navigated it well, of course, post Xi and Biden's discussion yesterday. Important. Remember, we're having a very global discussion throughout with senior executives. The new economy forum for Bloomberg is going to be upon us, and we're going to be discussing face-to-face discussions around the world from finance, trade, and climate. This is Bloomberg.
When you put the garbage inside, there's a little sensor that detects the garbage and speaks out. And this is one of the initiatives that we have created here. We, as the residents of this neighborhood, a bunch of neighbors that have come together to try to deal with the fact that our neighborhood is dirty. We want to make a difference. We want to have a clean streets that look nice and are nice to walk in.
בבקשה.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From New York City,
in London, in Sydney,
in San Francisco,
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
From Bloomberg's World Headquarters in New York, I'm Caroline Hyde.
I'm Romaine Bostick.
I'm Taylor Riggs.
And today, the S&P 500 closing within a whisker of a record high. And one key company that did manage to hit yet another record, it was Qualcomm.